hearts, midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud, future kings standing on their cloud. Checking the charts with their AI, up we go, reaching for the sky. Every trade home never dies, on the edge as the numbers fly. Checking the charts, tracking the charts, midnight glory. Time to re-in-awe, it's blending, mind on fire, never ending. Dreams of gold, let's fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. 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 Hit the like button.
What's up, guys? Good morning. I was talking to myself for a minute. There is no bull, there is no bear, there's only Trump. Market's going sideways. I want the market to go up. They're punching the market. Morning, bros. Bros and girls. That's it. I figured out Take Profit. I have a new contact there that I'm going to figure out quicker ways to get the accounts turned over. It's not customer service. Hopefully we can get you guys your accounts faster. Then it's been slightly atrocious over there, I hear. Their customer service has been so slammed. in this market crashing environment. Because everybody's customer service is slammed in a market crashing environment, even ours. Probably more than ours though. All right, guys, welcome to the stream. Welcome to the Arxier stream. I don't know, man. I'm feeling like the market is still trying not to rally off of that news. It needs something better to go. Earnings coming up might help, but we just moved up and it's kind of sitting flat. I'm worried that it's gonna, like, you know what I'm saying? People are still, VIX is still high enough. The market can be a little choppy and overreactive. I don't like that. You need to get VIX down below 30. It'd be kind of nice. Stream, you have to keep pressing. In order to help you with your followers, I want to suggest that you schedule a live stream so you can receive notification when you go online. It's difficult to find the live stream. You have to keep refreshing the YouTube page. Really? I didn't know that. I'll do that going forward. Like, schedule it in the morning. That's pretty smart. Already up like 6,500 today. Already in the market. Don't even know. Pre-market, 6,500. I'm going ham, man. I've been so lucky. I'm lucky to turn yesterday into a win. Also, yeah. Anyways, let's get to it.
Hit the like button.
I will start scheduling the stream. That's a smart idea, Neto. Thank you. The song had to say it one more time just in case you didn't hear it. Never liked VIX above MHP. No, we don't, right? We don't like that at all. Big problems there. So I might be hitting this super hard today on the long side still. We need to get bearish VIX though. That's the one problem. VIX is still kind of stuck in a state of, you know, keeping itself held higher for longer. 28.75, which is close. Well, we're not there yet. MHP on VIX is still below us. But you know, monthly hedge pressure creates kind of upward movement or resistance to downside movement. That takes a little bit to flip it over to the other side. Your triple B tomorrow is tomorrow. Oh, whenever. Yeah, it's the Tuesday before the Wednesday. So I don't know if, I guess the holiday schedule isn't affecting VIX because multi expiration is on Thursday this month. So I guess VIX is still Wednesday. And therefore tonight, Tuesday night, we should have a new, can take a midpoint. There you go. Or backwardation midpoint. Yep. Good morning. Roll call. Simon Dean, Sahil Batal, Nathan, Brian Trades, Julian, Ware, JTR, Mark, Hydra, Iswap, Patachan, Frank, Michael, Saynems, Victor, Ronnie, Jake, Dilius, Elliot, Terrence, Goober Guy, Jason, Benny, Dominic, Josh, and Eric, Sasha, Jim, Ty, and Abnesh. Boulder Bulge. Cam, what's up? Foxhole. Cam, you got your account set up. Got you last night, right? We bank it today. Hopefully. What's up, Sasha? Hopefully so. Bank it today. Been banking already this morning. Been crushing it. I think, God, I'm getting up to like my goal with the Tradeify. My goal is really 150K, but 100K is my first like marketable goal where I'm like 100K, the first step, but really it's 150 is like the ultimate goal. So 100K sounds cool. We're almost there. We're getting there. Pre-market. This is where we are. On a bad start. What did I do? Pre-market. I'm sorry about it. We opened, and we talked about this in the Zoom, in the boot comp. The Zoom call. Boot comp. Boot. I was saying boot call, and it sounded British when I said boot comp. So boot camp. The boot camp that I do every day at market close. We get together. We do our 20 days, $20 boot camp thing. And we're doing that right now. It's crushing. Everybody's having a great time. We're absolutely having all these wonderful market days, great examples of all the setups, everything. I talk about the overnights, but the last thing we do every day in the sessions is go over the overnights together. The overnights had monthly hedge pressure for NASDAQ. And we also were below monthly hedge pressure on S&P. So you could see how the NASDAQ was like looping up right here and the S&P was like pushing down right there. We had trading between the two of them. I told you guys, pick your choice. In volatile markets, we tell you, there's a saying here, wherever you want it to go, it'll go there. Check my phone. Oh, thank you. Yes. Oh, fantastic. Thank you. Very nice. It is feeling rather chilly in here. Thank you. Thank you. Thank you. Thank you. Got my free juice. All right. Oh yeah, I gotta do something real quick. So we talked about the different pivots, pushing this way, pushing this way. So the saying is, in volatile markets, wherever you want the price to go, it will go there. Trust me. So never get in early or chase a trend. Like in volatile markets, it's going to go all over the place. So get in where you think you want to get in. If you want to be long, your long pivot was here. You want to be short, your short pivot was here. So pick your poison. That's pretty much simple. All I did last night was I bought in 3 accounts, 2 contracts each. 2 of them were in NASDAQ. One of them was in S&P. So essentially what we did was market open. It fell. I bought right here in NASDAQ with 2. It dipped a little bit below right near my stop loss. I got 2 more in NASDAQ and then 2 in S&P right at the same spot. And then I went to a yoga class at 7 o'clock, which was here. And then I got out of yoga at 8, which was here. And I was like, oh, shit, free money. And I closed out. That's it. Boom to boom. Getting really close to S&P hedge pressure at that moment, I thought. And I was like, oh, I was in my car. I'm like, oh, shit. I was holding for the longer haul, and it pushed up pretty quick. So I closed out. There we go. It's like 6,500 to start off the day. Just set it with the stop and free yoga. That's it. 2%. What's up, guys? Morning. That's it. These are gimme trades. The market's walking right to hedge pressure, and we teach them hedge pressure is a resistance pivot in both directions. This was a long to here. If you were a bear, short from there. The overnight, the same thing. S&P tapped up against it, pushed back. 90% of days will stay on the same side of monthly hedge pressure, the orange that it opened in. Just like, remember, SPY yesterday was having a, it was open above and crashed below. That's a 10% chance. And so even though we fell, it certainly tried to retest by the end of the day before it came back, right? That's how that works. Very nice. Okay. How simple. Pivot to pivot. Pick your choice, like whatever's good to you. Doing volatile markets, wherever you want it to go, let it go there. It will go there. It'll touch every pivot you want. Just don't cheat yourself early. Don't, oh, it's moving up. Let me get in on this. Oh, there's green candles. Oh, let me get in. I'll miss out the uptrend, the downtrend. Oh, it's going down. Let me go ahead and short this. I'm going to miss out. You're never going to miss out on volatile market. Volatile market is big B's. So as it's falling, I'm just like, oh, hell yeah. It's right near my pivot. Boom, long. And then if it's right here, you're like, ooh, let me short this. I'm going to miss out. No. Let it go where it needs to go and then short it. You got to be careful in this market. Volatile market is the reason I haven't lost a day since like March the 1st, April the 1st. What month is this? April 1st. Only lost one trading day this month. Only one. Words are difficult the first thing in the AM. I'm telling you, like my brain is falling apart. I think once you turn 40, your brain stops like functioning as a center for coordination. So I realize I say the wrong thing sometimes and I do the wrong, like I'm like less coordinated, but also because I'm living like a healthy, clean, eat right, drug-free life. That's also helping, because I guess I fueled most of my 30s on drugs. So I guess I'm Adderall and coffee and shit was like fueling my life. So now the real Matt is just like a tongue-tied, goofy, nerdy guy. I don't even drink coffee anymore. This is how much my health scares in life had made me like clean stuff up. Alcohol free. Okay, let's lie. I'm not alcohol free though, but mostly. That's like on occasion when I go out to a bar, go to a dinner. Yeah. But like, you guys watched my Instagram last year and the year before and the year before. We're dropping 10 G's at the club and they're bringing out giant bottles of Dom and stuff. And then I'm just like, who wants shots, everyone? Shots. So, kind of laid off on that too. And you kind of see my starting to thin out, starting to look good, starting to feel good. But mostly cutting out the Adderall was like one of the bigger changes in my life. Although my ADHD gets the best of me sometimes, but yeah, I feel good. So I'm in this like workout mode. So I'm trying to like get in like super shape for the summer, like Vegas pool shape. Like we're going to go out and party all the time and just look good. There's a while when I didn't look good. So I have only buy and sell buttons or also the vertical ladder. I don't do complexity when it comes to order setups. I don't use the ladders, but they are not enabled on my DOM. I never really early on in my trading career, I try to get into, using like order ladders and stuff. And honestly, I just kind of fell comfortable into just straight up market orders. Print something. Print. I need to get my money back for this laptop. The second one I bought. So I bought I basically went and bought MSI Raider 5090. Oh, it's amazing. This is by far 10 times faster than my current PC. This laptop is a beast. It's got the brand new 5090 in it. And dude, it is and it's got the Series 2 Core Ultra. Like they have the new processors that just came out like months ago. So it's got the 285HX. This is like the 24 core Intel processor. I always do Intel. I'm an AMD person, even though AMD is kind of slightly better now, but I always said the same thing. But a 5090, dude, I got this thing and it is fucking crazy. Like it is by far, like with the AI frame generation and stuff, Dude, I was playing just for fun for benchmarks, going into Cyberpunk, and I put it on ultra psycho settings, full ray tracing, full everything. And this thing is going at like 150 frames, 160 frames on full 4K. This baby laptop is a monster. It's the most strongest thing I ever touched in my life. Anyways, I'm loving it. I'm having a good time. Not that I'm getting much game time in it, but occasionally in between the stream and the boot camp, I'm grinding out some Elden Ring. So even though Elden Ring's graphics are not like super hard on your computer, but love it. Buy about 2 of them. And so I ordered one online when it was pre-sale. And, you know, I paid full price to pre-order it because I thought they would be, you know, I learned to do this during COVID because your graphics cards and stuff were always hard to come by. And so I pre-ordered everything this time. And it was like $5,000 before tax. So after tax, like maybe $5,500. But then when we're looking at it on the stream, I pulled it up on Micro Center and the website was like saying like $900 or $1,000 off or something. And I was like, what? So I ended the stream early that day and I ran up to Micro Center. They had 3 in stock. So I just bought it with cash, saved $1,000 and I got to RMA this other one. So I basically have $10,000 worth of laptops just sitting in my living room. Well, laptop boxes, so. This configuring can play Pac-Man. I don't know if it can play Pac-Man, but if you remove like a couple of the ghosts, it might be able to, because it's a lot of Pac-Man needs a lot of power. You know what I'm saying? With all those blinking lights, maybe it's a maybe, but it's been fun, man. I've had a good time. It's smooth, it's fast, and it's not that hot actually, believe it or not. So we're good. That is the fastest laptop CPU Passmark has ever benchmarked and the 31st fastest CPU in all. Oh, that's crazy. I'm going to tell you, I was worried because laptops always take a performance hit over desktop versions, especially with the graphics card. I would say the 5090 on the laptop probably going to be half as powerful as the desktop version. But this thing is absolutely more powerful than my beast of a $20,000 computer with 13th gen Intel and, 3080 Ti's, 2 of them. And even though 2 of them doesn't mean anything for benchmarking the computer, it's crazy. So the new generation stuff is crazy. So I bought the laptop. The whole point I'm saying you this is because Nvidia should tick up a little bit. I'm adding to their sales, so we'll see if it's rallying. And look at that. There's my laptop purchase right here. Nvidia gapping up just a little bit, which is great. Good to see this. Do I smell giveaway today? I smell foam. Oh, that's what I smell. But the CPU is fantastic. Like it by far is like, I'm finding myself doing my work over on my gaming machine over here. Just because it feels like, here it's like, this is the production stadium. And over there is like one giant screen with everything I need. By the way, so yeah, you guys have been telling me about this prop firm called the Futures Desk. I haven't checked them out yet, but I won their contest, like best trading setup. It was interesting. So let me show you guys. You haven't seen, now this is before, it's even cooler than this, but let me show you guys my trading setup before we get started for pre-market. They messaged me and they were like, congrats, you won. Hold over here. Like, congrats, you won our contest. Hold on, wait. Let me make it bigger so you can see. So I had the rocket scooter logo wasn't put up yet. This is when I first moved in, and right when I first got the computer and the paint done, and then the acoustic dressing in the room, got all that done. But here's a close-up of my skull lamp. If you guys been waiting to see it, this is like the coolest thing. I had some artist in London make this for me. You guys know me and my love of skulls. If y'all see the bracelet and the coffee cups and all the skulls on the walls right here. There's skulls right there. It's like a pirate ship in this trading office. I gotta turn the music off because it's copyright. So there's the old PC. So basically, here's the PC. The lights are not like set up at this point. My lights have a certain lighting scheme now, but I have a dual system water cooled build. There's a computer here and a computer here all in the same case. So I have 2 computers in this case. It's a monster. Free skull, yeah. So this is what I trade on, and then this is where I did all the lighting. So lighting's all set up and looking better now. But even so, it's not too bad. And this is my gaming station and like editing station and working station off to the left. Just one giant screen. I got ballin' headphones, like production level stuff for listening. So I'm like jamming out to music doing my work. I love it. And then now I have, this is on an ARM, and now I have a laptop ARM. So I have to give you guys a new video. But basically, like, I have a laptop that can swivel around, and then my big computer here, and then I got my headphones on doing my work. That's it. Apparently, out of like thousands of submissions, I won the prize. Oh, imagine that. I was pretty happy. They sent me a message like, congratulations, you won. Like, I don't know what it was. Like a $300 credit to use their service and whatever. I'm just like, you can donate it to someone else. But I sent them a message and I was like, hey, reach out. You know, I'm a big trader in the space. I, you know, work in the prop firm world, and what you guys got? You know, let's get some affiliate codes going out here, and you know, let's have a chit chat. So maybe I'll grab a code for that. I hear they're pretty good. Somebody here was telling me about them. Ginger beer has entered the setup. You know, and I thought that was by far, and I used to keep ginger beer in my fridge basically all the time. So I would drink a Moscow Mule like on the daily, like all the time. That was my drink of choice. Damn, YouTube banned me for a day because they thought I was showing all beer in my stream. Is a second table extra for you when you move in? Yeah, you can. The problem is your bed will be under the table. There's not enough room for a bed though anywhere else. You have to sleep under the table. They knew who I was. Yeah. Did they? I don't know if they did. Maybe they did. I reached out and introduced myself. I'm like, hey, my name is Matt. I'm a trader. Let's talk. Let's talk business. Let's see if they'll reach out. Maybe I'll get an affiliate code or whatever. Your top 1 futures code doesn't work. It doesn't. All right, hold up. Weird. Okay, let me make sure I get it right. Hold on. Wait, what is it? Top 1. I signed up for the affiliate program and all that. Top 1 trader. Okay. Is that it? Top 1 trader or top 1 futures? Are they different websites? Oh, dude, I probably... Let me see if it works, because I signed up. Maybe I signed up for the... maybe it's only for... Maybe I did top 1 trader instead of... Maybe there were 2 different systems. I think I'm with the top 1 trader then on accident. Oops. Okay, so it's top 1. Wait. Okay, account not found. Okay, I got a confirmation email. It's like, congratulations, you're in, or whatever. Let me look it up real quick. I'll have to figure it out after the stream. All right, I'll figure it out after the stream. Maybe there's a step I need to take. I just remember getting a confirmation email and they're like, you're good. And I was like, okay. Top 1 trader. Welcome to top 1. Okay, let me log in again. Okay. So that is top 1. Oh, you're minutes away from launching your partnership marketing program. Oh, that's my bad. I didn't finish setting it up. I logged into the terminal and it's like, that's Top One Trader. I wonder if Top One Futures is a completely different program. Let me go there. All right, let me log in with my login credentials. Okay, let's get ready to get started. 10 minutes till market opens. Kind of. Oh, okay, so that's Top One Trader. All right, I figured this out. It's a whole different website, a whole different program, a whole different everything. So give me a day, I'll figure it out. SPX and Nasdaq are not doing the same thing right now. SPX and Nasdaq aren't doing anything right now. Market's closed. We have a rule here. What's our strategy? We find liquidity and we long it. Pretty much the strategy here. We have a gamma exposure model that we use that isolates dealer exposure from the options feeds. And with dealer exposure, we get razor sharp pivots off of our automated pivots that our algorithm draws for us. Right there, for example. That's on NASDAQ. S&P still here, sitting in between the overnight bands. So we're pretty much inside of the consistency. 88% of days stay in the middle. I'm looking for another inside day to yesterday unless news comes out to push the market higher, which I'm not really sure we're getting anything crazy today. This laptop. I love my laptop so much. We got some bank earnings coming up. Yes, we do. Goldman Sachs on the 14th. Bank of America today. Citigroup today. They all came out pretty decent. Earnings came out good, despite, I mean, banking's, I don't know if it's going to be affected by the tariffs, but not bad. Have any more? Netflix on Thursday. Long it. Export price index information month over month. Not much of a change. Not really that big of a catalyst today. Nothing really. Some Fed speakers. So the speakers, as we've been seeing, the market's been insanely sensitive. I remember yesterday I was in a trade. The market popped up for like I don't know, $7,000-8,000 worth of profit just in the middle of just sitting here in some longs. So market's very sensitive to the news and doesn't look like grab anything but from Fed speakers and maybe, so listen to your news feeds for anything related to Trump saying something or foreign stuff related to tariffs, other people saying things. So retail sales coming out on Wednesday. That's going to be a big one. And Papa Powell speaking. So that's going to be big. Oh, the GDP now as well in Atlanta. In the 20-year auction, not as crazy as the 10-year was, but maybe we could see. 10-year was pretty crazy. The bond market's just collapsing. Well, it's because the interest rates are high. Or inflation is high. So the yields aren't high enough to make that an appetizing trade for a lot of people. So people aren't rushing out of the market in the bonds right now. Kind of avoiding that market. What's up, Stu? Good morning. Yeah, so a lighter news week, but listen for, random speakers and, obviously bank earnings came out pretty strong today. Market is still trading slightly higher off of yesterday's close. We did have some selling into close. Actually, sorry, selling, right in the close. It sold a little bit harder. We kind of returned back to where we started, and now we're here. Actually, I think we are gapping down just a teeny little bit. So pay attention to the resilience number in the white line over here as soon as we open, to see if the market's opening. With the tendency to fill its gap to the upside. We're still watching the VIX. VIX futures above monthly hedge pressure. We don't like seeing VIX with monthly positive gamma, that's leading to further move up. If this market consolidates inside of here, VIX is not decaying, I'm going to feel a little worried, right? That we might have a big sell-off day before the market comes out and stabilizes. So right here, we're kind of seeing this like tail end of the noise. While we're no longer crashing the market, is there another bear leg down coming up in another month? That's kind of what I'm looking for. So this month, the market's stable. The question is, are we going to end of the month rally? Like, kind of fill this out. And so I think that the tariffs are a major push to bring the market lower. And now there's a pause on much of it. I think that's like a bottoming effect. So the market this month has bottomed out for sure. It's not going lower lows this month, but it may not rally either. But we could have a big sell-off day inside of here, which is great. I'm looking to build a solid options position for months out for the return. This little sideways trickle day is just a theta bleed kind of thing. So I'm kind of just sitting on my position. If there's a dip, I'm going to kind of pile into it heavy. Glad to see the same vision for today. Yeah. Some Fed speakers going to be hinting at the rate cut. That's probably the next piece of good news we'll get. When are we getting rate cuts? I think Fed futures are pricing in pretty heavy for May. But I didn't think we were going to get rate cuts in May. But if you look at the Fed watch, we have 17% of people think we go to 400, 425. So there's still a huge pricing in of a rate cut in the next meeting. Still close to 20%. As you recall, the last couple of Fed meetings, the Fed watch was like basically almost 0%. Direction's not clear yet here. The direction is clear, but the path is not clear. The direction is certainly up, but the direction of how up is not clear. Up meaning like flat to up, like barely up, right? There's not a lot of selling pressure or illiquidity, but the VIX is still high enough that the market's choppy with a trajectory upward, right? But like just slightly up. Now, how up is unclear for me. Do I think we're rallying straight up? I don't know. I don't think so. Do I think we're going to crash out? I think it's more likely that there's a sell-off day than there's a big blast-up rally day. But news-driven market can push it any direction. That's why I think the market's stalling right now. Did I load up more options into the day yesterday? No. Not yesterday. I need the market to fall a certain percent. Yeah. Flats up. Now, all of our greater market signals are still bullish for the most part, with the exception of yesterday losing MHP, turn one, and then bearish. But our greater market signals are going to be DD ratio, which will be greater than half today. SPY, which hopefully will be above MHP because our bank earnings came out pretty good. And the monthly maps just screaming bullishness, which is good. Or screaming bottom, not bullishness, but the bottom is in on the monthly maps. So the monthly maps is our forecasting tool that looks out 3 months. It can tell us the market has bottomed, which is good. All three are bullish. The only one today that's going to be suspect is a SPY hedge break. If we open above SPY monthly hedge, then I'm going to feel really confident about this market. And hopefully grab a long off of it if it dips there. I'm already up 6,500 pre-market. I took the long off of the overnight dynamic hedge pressure on NASDAQ. Super clean, super simple by the book trade. Market open and it fell right to it. I built a position, went to a yoga class, came out, and it was done. What you see on the screen? $6,500 already. Plus, it's Passover week, so price can tend to chop around. Yeah, we have being a holiday week as well. And the U.S. markets are closed for Good Friday. Will be a shorter week. Lots of T-bills were bought, potentially allowing Fed to lower rates. Oh, very nice. Yeah. So with my options position, I need the market to lose a little bit. I need the market to lose some delta so I can buy at lower delta. Since delta is going to be the carry of this trade and have to use that to beat the theta loss in the IV crush, I need the options to lose delta. I can't have the options lose value. I need them to lose delta. So I need the market to go down about 3%, and then I'm going to load back into more positions. So I'm betting on a W-shaped bottom, and I've got options for a little over a month out. So in that particular mode, I'm waiting for the market to dip so I can get the same options at lower delta. So I'm looking for recovery on that. Yeah. So, and I usually load up at the end of the day. I have a really big sell-off day. So while we did sell a little bit, that's not enough to add to the position. So I've got like a couple 100,000 ready to go for this options trade. I've only put in 30,000 so far, just 30. Nothing big yet. Just averaging in. I do this every time there's a market crash. I aim for a bottom, and then I pile in. Now I got unlucky on that Trump day because I was already kind of planning. I'm like, okay, now I'm gonna start buying my options, and then I go get the haircut at like noon, and I'm sitting there, like I'm driving with IDOC to the building that I was going to, and I'm like, she's dropping me off because she had somewhere to go, and then market's up 10%. I'm like, oh no. Anyways. Let's get it. Let's go. Your DTE is 300 for call buying and 75 delta. What's your target? Wait. Your days to expiration is 300 plus. You're looking for a year out. What strike are you looking for? Like what range are you looking to trade to? By the way, our monthly maps and liquidity maps have been coming in ultra fast now that we read at our system. It's like super fast, and I'm excited to see. Yesterday we got him in at 15 seconds, so let's see if we get it again. I think this is yesterday's map still. No, it's not. Yes, it is. Ooh, that is fast. Guys, really fast. Okay, so we have long setups here out the door for Nasdaq, which is good. Illiquidity pocket. I don't know if I can grab this long here. Resiliences are positive, means the box itself is support from here to here and from here to here. Any dip off of Nasdaq, great, is a long setup from here to here. This is perfect. Everything bull. I love it. All the stuff is bull. So not chasing longs because the market's volatile. Remember, there's a pivot. Wherever you want it to go, it will go there. And I want it to go here so I can long it. So it will go there. So I'm going to wait for it to go there. So the S&P is looking like today. Very nice. Bull setup Nasdaq MHP 47.5, but S&P below monthly hedge pressure. Damn it. So this is what I wanted to see not happen. But if we get an MHP break, it could be good for the bull side. So SPY is less than MHP and trying to break through, which would be nice. Breaks through, that's bullish. I always chase every single time liquidity pocket on the S&P. And I think I'm going to miss out of this unless it pulls back. So let me let it pull back. Let me take the long right off of here. 540, 541. And that's basically it. And 90% of days will close below MHP. But if we get an MHP break to the upside, fan-freaking-tastic. So this is great. And I think this is the EST trade that I didn't see and didn't get. But I would scalp from here to here. This is perfect. All right. MHP break to the upside. Very bullish today. As long as we're good here. Now, I know this is the setup. I kind of missed out on this, and there's nothing else to take from here. But here to here every single time. And then if we bounce from here to here, there's a liquidity pocket all the way up to DD band. So that's basically what we're looking for today. This supporting here is a potential long setup to move up. Now I can scalp this from here to here repeatedly. And then back below MHP, there really is no support underneath it. So be very careful. Anything below here could be bad. Not really crash bad because we did open below MHP, just expected bad. Well, let's see what we got. This market's going to bounce off of this line multiple times. So breaking into liquidity is good. That's really good for the market. For some reason, on the bears showed up on NASDAQ. There to there as well, kind of a similar setup. If we break 460, NASDAQ has an IP as well to go all the way to the top. Now the question is, should I attempt a long right now on one of the accounts? Or should I chill? Very strange little bump at the start of the day. Let me chill on this and just wait for a second attack. Any downside play doesn't really have much to go off of here. So let me let it simmer for just a teeny little bit. That came out too quick for me to act on it. And it's only been a scalp from here to here because that's our normal playbook. Resiliences are still positive, so we're going to be supporting the half gap here. I'm curious if we do get a big rally, though. Let me tap it with like one contract just for funsies. Just for one. And I'll lose 500 bucks if I'm wrong because I'm just going to trade it and scalp it one more time. Not going to take much risk on this at all. Kind of scared that this is going to hit MHP and turn around and sell off, but it's good to at least kind of take one smaller attempt. NASDAQ's kind of sitting in the middle of the space, though. Let's keep our eyes on SPY today because that's really where the key breakpoint is going to be. And let's watch our monthly maps while we're chilling. Because I'm just putting one contract on it. We are still in liquidity pockets. Perfect. Markets, still in bull setup. Whenever the bull side is above the bear side and the bull side is sloping down like this, the bottoms, and the top of the bear side is sloping down, this is still bullish, or at least showing that this was a bottom in the index, which is great. Excited to see that. I'm going to be very careful on any rejection here. I don't believe that this is a big bull up from here, but I have to take the trade just because statistically it's the right thing to do. My confidence in this is not that high, though. Although all the data looks good, I still have to kind of like assume that we're going to close below MHP. But I'm going to try one more stab at here to here just in case. I said I'll risk about 500 bucks for it. That's it. That's it. We're going to just be in the position in case there's an MHP break. MHP break could be a gamma squeeze, which is good. I'd rather be in the trade than out of the trade. But this is a rejection pivot as well as this. So we're going to be very careful because I need this to break. Only 10% of days will break through and 90% of days will break the other side. Now, yesterday we had a 10% day that way. And today I'm betting that the 90% is probably going to win. So I'm being very cautious here. So we'll see. Let me watch NASDAQ as well. Guys, don't forget to hit that like button today. 500 viewers, we'll be doing a giveaway like we always do. Pretty clean. Trying to make a move, but I'm on a high alert that today is a big sell-off day. I really, really, really am. But if there's a surprise move, it's to the upside, the 10%. So my confidence in this is really low, partially because this is a negative number. MHP resilience being negative shows that this is likely to be resistance more than not. So about 10% of days will break and go. I'm in it just in case it does. We'll see. It'd be only going to the upper band. That's really all I got to go off of. And then one more push to liquidity pocket. I'm going to close out. As soon as I go from here to here, I'm going to close out. I'm not holding for big breakout rally. Let's get some momentum. Resilience is greater than 0, which means the box is support, which is good. We're below MHP, which is not that good. We need to get one more bump to about here. So I'm just playing with pennies here. One more push higher. I just put one contract on it just in case it goes. Are we in the bull market we want? All the signals are good. All the setups are good. MHP break to the upside is good. Good, 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 good. Let's see. Again, I don't believe that we're getting a big breakout rally today. But I'm long on an MHP break just like I always should be. Just in one I'm only doing this in one contract, one account. That's it. Just break highs and I'll close. Top of LP. Take it and close. That's it. Here to here, I'm done. That's just a scalp, 10 points from 51 to 61. And I'm out. I have no evidence that the market's doing anything from here. I'm fully flat across the board, which is good. Love the bull sign. Love the bull setup. DD is less than half today. Ah, yes it is. Yes it is. Okay. So keep in mind that we did lose one of our key signals. So the upper band is resistance. So we'll probably hit upper DD band and sell off today. That is bearish. So be very, very alert on this one. Good eye on this. So we have a trade setup that's actually very important to understand in this environment. When that ratio that somebody just mentioned is less than 1/2, which is here, the market's going to have a very hard time pressing through that green band. So today might be selling pressure from there. So bears might get happy and lucky today. A move to there is selling move. If there is one. The upper band. And Nasdaq is getting very close to its upper band. Resilience is increasing, yeah. Looking hot. Looking solid. Breaking into bull zone. With ratio hopefully goes back to being bullish. We always bet that it can go back to bullish. I don't really bet that when it's close to 5 that I bet that it is not going to be good. I always bet to the air to the good side of the bet. So let's look at the scanner really quick and let's see what we have as far as liquidity map current. Let's see who is becoming bullish today. We're going to look at which big players. Nvidia just popped in the bull side. Okay, that's what we see this morning. Well, not just now, but this morning. Nvidia bull long up perfect. So Nvidia and the rest of the tech stocks looking great. I'm going to air to the side of the tech stocks looking great. That's good. All I did was a liquidity pocket scalp, which is a pretty normal setup. That was pretty clean. I think it was worth like $300. But be careful that this being below half, there is going to be resistance at the upper band. I wouldn't be shorting this today. That's for sure. Especially not here. I'd be waiting for the full complete move to the upper band if I even were to take a short. MHP breaks are rare. 90% of days will be below this orange line. So I'm not really convinced it's going to keep going up, but all the signals look good except for this. That one move means there's upper resistance from this upper band here. I'm really kind of stuck because there's not a good trade setup other than to trust MHP long to there with a small position. So what I'm waiting for is that I'm going to make sure that I get a nice solid bounce in like stocks like Nvidia. And then wherever we bounce out on the bigger players, I'm going to kind of build along a second time. So maybe that does pull us down to here. I can build a small long back up there to break out. But my spidey sense is telling me we're not going to get a breakout today. MHP breaking on Meta as well to the upside. I do love it. I do love it, y'all. The market is bottomed out. Let me tell you guys. Y'all know my secret on how I know the market's bottomed? Let me show you. I tweeted this the other day when I called the bottom. I'm always Let me show you guys something really cool. If y'all didn't know that I can do this, I've nailed pretty much every market top and market bottom. And I don't tweet like this is the top or this is the bottom that often. Let me show. I love this. I need to update this picture with my latest calls. So the monthly map tool, I'm about to show you guys how it works, just really quick. Look at this. Just letting you guys know, this is like COVID 2022 top. Right here at the top, I use monthly maps and our tools here to know this is the first time, and as long as I can remember, I'm seeing a short-term correction. And I never said correction. I was bullish the whole way up. Bull, 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 bull. I said this is a correction for a quarter, and the market corrected. Right here, I said this is a 2-month bear market rally. It was exactly a 2-month bear market rally. And right here, I said this is the bottom. This is the bottom of the sell-off. Exactly here. And then that was right. And then at the top, I called this is the top. I use our monthly maps tool. It is so freaking good at what it does. My last tweet of calling the top, which was in December, that was on point too. And again, I'll show you all the setups I did with that. Where'd I get this one? I'm gonna show you how I do it. Wait a minute. Oh, bookmarks. Where'd it go? Oh, here it is. All right. Just FYI, I give you guys a little bit of a treat here. Just FYI here, a little treat. From October 17th, 2022, when I called the bottom, I was bullish the whole way up until here, and then I finally called the top there in December. I said I was a bull, called the bottom back then, now feeling this is the top for the year for now. And today, the first time in over 2 years, all of our signals for greater market are bearish. I'm only a bear when they're bearish, blah, blah, blah. For a day, for a month, a year, I take bearish just one day at a time. And this was the top. So the day after the top, none of these things scared me. None of this scared me. This told me this was the top. And that was absolutely the right call as well. And I don't make big ass posts like this. And this was retweeted by so many people in the space because they know that I don't speak up that often. And that's it. And so I've called the bottom now again. So I've used our monthly maps to call the bottom. And I've said this is the bottom of the crash for now. It's a candidate for the bigger bottom of the market. And so I'm not entirely convinced because it's a news-driven market. Unfortunately, the news can prove me wrong. Being a news-driven market, anything can come out to change the direction of this. So it's unfair to like anybody that's calling a bottom or calling a top because you can't use technical reasons. A news-driven market, this can completely crash out if bigger conditions change. But as far as structure goes, we have bottomed, and this is easy to see. And I started loading up in my options calls exactly on this day. I missed this day. I waited for this day to happen, and then I started loading up on my options calls here. On this particular day, I'm circling. Now, what you're looking for are key things. The bottom of this gray box sloping down, the top of this light gray box sloping down shows that it's in the middle of a short squeeze. The market's going to curve and accelerate faster as it does rally, if it does rally, because that's what short squeezing looks like. It's a curving upward like that. And we're currently squeezing shorts, especially flipping gamma positive above monthly hedge pressure can cause additional squeezing. Now again, with this ratio less than half, the market's having a hard time breaking out of that upper green. So it's probably another range day today. But we have to see where our liquidity pockets are. And the fact is that when you have a pocket, which is the empty space between bear and bull, in that pocket, that shows you where liquidity buffer is. So if the market were to sell off really hard, you've got liquidity all through here. Liquid markets don't crash. Think of it like as a giant fucking trampoline to keep the market afloat. I've called tops and bottoms all my career with this monthly map. This is by far the most powerful tool available for retail traders. It's so good. I'm about to make, a big gain if the market does bottom from here. Fingers crossed, it's a news-driven market. It could absolutely be wrong, but we'll see. We'll see. Where did that actual tweet go? Oh, here it is. So let me show you one more tweet and how when I called the actual day of the bottom. So let me show you guys what I did. I thought I saved it. Oh. So a couple things, and let me show you what you're looking for. Now, this is just this particular post, but I'll show you guys the one like on Wednesday, when Wednesday happened, that afternoon on April 9th, I tweeted, "This is the bottom." That's it. So I started showing everybody the case for that. So what happened is, and this is very important, is that on your monthly maps, when you're trading in a bear zone, as soon as you break through and support above your buffer at the time, you found the bottom, and the bottom has been in. The market hasn't continued to crash, and VIX has been in decay. So this is a good call. We did get it right. Very awesome call. Monthly map spectacular. Everybody here on the same page, dude. Everybody inside of our Discord on the same page. Very nice. As long as you move, the news is good enough and survives above your liquidity buffer, then it bottoms out. So on this particular day, on this run, and that afternoon, I go, yeah, that's the bottom, because we'd have to drop and hit circuit breakers on the very next day just to kill the buffer. And the market did try to hit the circuit breakers, but we buffered at 5% held. So you can see that the news was substantial enough to change the direction of the market, and monthly maps picked it right up. So that day, I'm just like, this is the bottom. And on April 9th, I tweeted it on that night. So I bookmarked and everything and said, as long as 75 countries don't pull out trade deals with us, this confirms the bottom. Trade war with China, which is where we are now, basically, it's all we've been reduced to now is a trade war with China. The last term caused choppy days. It didn't cause 20% correction. See you back at the top. That's it. So I've done my Babe Ruth pointing at the fence, bottom is in sort of post. And again, top and bottom, I don't say top and bottom, except for once every couple years when it's the top and it's the bottom. So let's take a look while we're chilling on this. Nice, clean, easy bull market to the upside today. On MHP break, DD ratio is back to being positive. This is good. On the S&P, we are in an illiquidity pocket right now. So there's unlimited, unbounded move to the upside. Any trade today, what I'm waiting for, if you guys wonder what I'm waiting for, is if it falls to here, I can take another long scalp to there. I don't want to chase the long on bad R&R, but the finale of the move is to here today. Here. And I already made, a decent profit already. Nasdaq is at its quote-unquote here spot. So the upper DD band was the target today. If you guys are in that trade, very good job. You took the EST every single time. Very nice, very nice. Let's look at the COT chart so we can see if there's overall bigger liquidity in the market. On the futures side, there's a hedging side of the market. I've been watching what did Peter Brandt call them? Prop prostitutes, and then I portmanteaued the word, call them propstitutes. The prostitutes of the world blowing up their accounts every other day. God, I've watched one of these clowns. Well, not my friends, but this dude's an absolute clown. I watched this guy reset more times than a fucking 1987 NES system. It's for the game to work. Reset. Motherfucker's blown up 8 times this month. Jesus Christ, and people watch this nonsense. Some of these people out there are just hopeless. All right, let's analyze this. Uptrend is good. Yeah, today it's good. I don't understand how you could blow up 8 times in a month and still have an audience. But then again, yeah, I can't name a name because if I tell you who the audience is, you'll be like, oh yeah, they all eat paint chips. These guys are idiots. The whole crew is idiots. But anyways, whatever. Liquidity. Now, interestingly enough, we did have a downtick and a downtick. So to be careful if the next week or two doesn't produce any kind of pulling back. So monthly maps are looking solid today. What you look for is you look for 2 things with commitment traders. You look for them to pinch or them to pull. They pinch and pull, the market's liquid. And so far in the selling, believe it or not, on the hedging side, it was pinching and then it was pulling. Now, this is the last couple of weeks before we hit the bottom. So this was in the week of March the 31st and April the 7th. So this is like week-old data, and that is where we sold off. So we need to get the new data point that's coming out on this week. So we'll get the new data point to see where we're ticking now. While we were trending down here and trending down here, this was officially liquidating market. Anytime they both slip down, the market is very, very, very brutal to the downside. Anytime they're both slipping up, the market is very brutal to the upside. So what we wanted to see is what I'm hoping is that we did get a fanning out just like this. And then this will be the next data point. We'll show that. Now, again, we're still kind of seeing the noise of the final part of this bottoming process. But right now, it's inconclusive as to where we're going because we do need a new data point. It's just proving why we sold off because everyone was liquidating. Longs are selling, shorts are shorting harder. Yeah, somebody says do not short. DD band, DD ratio less than half, do not short. Really solid day today. I need to break this expected range so that my options can pick up some steam today. Nice and clean, y'all. Nice and clean market. Long setup all the way up to upper DD band. That's good. Gamma says the bias is long. Yep. Gamma's on point. There can be resistance from this upper band, which can, again, totally surprise all of us. There is no shorting when that number is 1/2. The rule is no shorting at all. I'll show you guys this. Even though it can pull back, when the DD ratio is less than half, I short pretty hard. When it's greater than half, I don't short at all. When it's right on the edge, we side with what we call the blind monkey. You guys remember our metaphor in this group, the blind monkey trader. We side with the bull side always when it's tied. When it's close to 50, we side bullish, right? S&P still had a little bit to go. So the neat part about today is, remember, you guys remember my rule? What's my rule? You guys, if y'all are bored waiting here, type my rule to show me you remember it. If there's a pivot that you want, what's going to happen in a volatile market? If there's a pivot that you want, trust me, what do? There's a pivot I want, it'll go there. Just wait for it. It will go there. I'd love to hit this pivot one more time, and I'd love to hit this pivot one more time. Volatile markets, I don't chase trends. I don't jump in. If there's a level that you want, pick a level, any level. It doesn't matter. There's a level you want, trust me. It'll go there. At some point, it will go there. Volatile markets go everywhere. There's nowhere they don't go. So if there's a pivot that you want, it will go there. It's a very substantial, it's a funny way to say it, but it's a very substantial trading methodology. There's a pivot you want, it'll go there. Pick a spot, any spot, it doesn't matter. It'll always go there. Except when it doesn't. And then if it doesn't, you just didn't get the trade. But you wait. It'll go there. Pick a long, pick a short. It'll go there. If I want an MHP, I want bear zone top. Don't worry, it'll go there. If I want a short way up here, don't worry, it'll go there. You want a long from down here, don't worry, it'll go there. It's a volatile market. It'll go everywhere. Let it go there, which is it's a funny way of saying don't chase is really what it's saying. Don't chase on a trend. Trust volatility just means expanding range, whether it's up, down, sideways, circle back, go back in time, stay on your head, doesn't matter. Whatever you want to happen will happen. Trust me. Volatile markets are lovely like that. What do I want to happen today? So let's sit there. What do I want to happen? I'd love for us to test monthly hedge pressure to confirm that this is a solid breakout. And I'd love to long from here to here one more time. But it looks like it's an uptrend and it's pulling back slightly. Should I get in on this? I'm missing out on the trend. No. Volatile market. You're never missing out on anything. Because whatever you want to happen, trust me, it will go there. I want that to happen. Okay, well, let me just wait for it to go there. That's it. Right now, you've got a market wedgie. Hilarious. Did this morning, it's going to work. Yeah, whatever you want, it'll go there. How do you connect your Rocket Scooter platform to CQG Swell? You go down to the bottom, you click on connections, then you click on connect, and then you connect your futures that way. Hey, question. Those of you that just signed up, are you getting a welcome email from us with the instructions? Curious if it's broken or not. So whatever you guys want to happen, it'll go there. Trust me. Do I have for IWM? Yeah, we have for everything. We broke through MHP on IWM. Looks like it's retesting right here, which is good to see. Oh, so somebody said, why was Peter Brandt hating on props for so hard? I know. I reached out to him. But I was like, I bribed him with my broker statement. So I was like, look, here's my broker statement. Let's have a chat. You know, I was like, I'll show it to you. And then he messaged me and said, that's pretty crazy because nobody sends broker statements to each other in this business. I was like, I know, I'm not like anyone else. Then we struck up a friendship and then we started talking a lot. Then he tweeted about me. He's like, I talked to somebody that's substantial player in the prop space, and I learned a lot, and I might change my opinion about this whole thing. And I was like, wow, nobody, like, he did what I did, which was hate on the prop space for the longest time because I thought it was scammy and scummy and for newbie traders and for, influencers who are terrible at trading to pretend like they're good at trading. I still believe all of that, trust me. But now I've kind of softened my approach because I've seen the good side of what it can do. How it can fund traders, how it can help traders grow, how it's a great practice environment. I'm not drinking from the Kool-Aid either. Nobody pays me a salary. I think it's a perfect environment for new traders because I remember starting out and putting 20K into a futures account and blowing it all up, like a decade ago. I remember losing the money I had. And I remember how hard and painful that was. I remember not having a practice environment other than paper trading. And paper trading is a garbage use of your time, is a waste of time. But the prop stuff makes it easy for you to put real risk and real reward in front of your face and take trading seriously with very limited downside. The risk is on the prop firm, not you. With a simple, with a simple $2,500 investment trade of 5, I've already taken them for, more than what I put in or whatever I put in, I've taken more out. And so the limited downside risk is great. I mean, I don't lose a lot when I lose. If you're constantly resetting your accounts, you're going to probably lose a lot. But at least it's buffering. You're not just like plunging to your death in one single day. You've got a finite number of accounts and you can bust them all. Oh, darn, I lost $2,000 worth of Apex accounts. I mean, try losing 20K in a day or 100K in a day. Try losing everything on a bad news tweet. You know what I'm saying? So I embraced it because you guys embraced it. And then I started doing it because you guys do it. And then showing you guys how to beat the system once I realized the game was rigged against y'all. But once I had a chat with Pete, he seemed to open up to the whole idea because I told him, I said, this is a practice environment for newbies. His distaste was more for the promoters and the people parading as good traders because they have lots of money, whereas 90% of that money comes from selling the product and not the good trading, but they're parading as good traders. And I have the same. We both share that disgust to the industry. We both think that's kind of silly. At least be honest about where you make your money from. And there are big influencers out there who are now, and I told them there's influencers now who are actually just being honest about it. They're just like, I don't even care. Pat revealed how much he made from Apex. He's like, I don't care. I make most of my money from affiliate sales, and I'm an okay trader. That's what he said. And I'm like, see, Pete, even they're being honest about they're making a killing in the prop space. They're not even being dishonest about it like originally people thought that everyone was. Now the prop influencers are just like, this is how much money I make as an affiliate. I make $100,000 a month as a salary. They're all bragging about it now. So it's basically blown out in the water that it should just be accepted. And that's kind of like, yeah, they're being honest. That's what they're making. And then he's like, oh yeah, he's like, I'm starting to kind of see it now. I'd be like, it'd be different if they were like saying, I'm the world's best trader. Check out my Lambo and I'm a better trader than you. But they're not. They're like, yeah, I made $100,000 today in Apex sales kind of thing. And they're being transparent about it. And I'm like, transparency is what you want in the space. So I think his beef was that it wasn't that transparent. So I kind of told him that it was. I'm gonna let it pull back. I'm gonna try to get one more liquidity pocket trade. We got to tap this lower section here. But yeah, he was just being very like old school about it, which again is the right approach to take because it kind of is a bastardization. Because while the bigger influencers are being transparent, the smaller ones aren't. The smaller ones are trying to build their brands right now, like these new era COVID traders, like by pretending they're good and telling people they're good, like the Danny Trades of the world, when they're really just hiding the fact that they're not doing well. And that's the dishonesty that back in when I was streaming in 2015 and 2016 when I started, if you were just branded as a liar in the smallest degree, like you paper traded one time when you were really trading, it was a witch hunt. Everyone was out to get you. And now it's like fraud is accepted. And it's kind of become a thing that people that have been trading for a while have a hard time adapting to. And I don't blame them because I had a hard time adapting to it. I come from a world where paper traders were burned at the stake in fucking Salem in the 1800s, okay? This is a place where paper traders are celebrated because they got paid out one time in Apex kind of thing. It's hard to adapt to myself. Some guy on Reddit took on $35K in credit card debt, blown on prop evals. The prop business still has its downside for the addicted. It really is, but at least that addicted person is going to lose all their money some way anyways. At least with the prop space, they're at least getting an education. Each time they blow up is an education rather than blowing it all up in one $35,000 gulp. Yeah. What happens when it goes away? I don't think it's going to go away though. I think it's in a bubble right now. I think the bubble's going to pop, but I don't think it's going to go away. I think the prop firms are going to evolve and basically essentially become real prop firms. Once the competition becomes too steep, they're going to have to basically overcompete with each other, which basically means lowering their risk model and putting themselves at risk, which is going to pop the bubble, or else it becomes saturated and everybody fails too. So there really is a limited upside in the growth in the prop space right now. Everyone's just kind of fighting for market share, which means you're in a bubble. What's going to happen is that the bubble pops. The prop firms that get rid of the sim to funded step and they basically give you straight up live accounts are going to be the ones that survive, like real prop firms. Pass the eval, prove yourself. Here's $10,000 of real funds to trade. You can keep everything you make after this, no more rules. That's going to be what attracts all the market share. No rules prop firm, which basically means you pass the eval with all the rules, then you get the live account with no rules. And I think that's where the space is going. If I started a prop firm, it would be that, because that is the future. That is the future that'll stay. Because the risk is so low to the prop firm if you give somebody real money to trade with and limit it. You don't get these big like gamble news sim fund out payouts that just basically steal all your money. If anybody wins, they win in the market. If anybody loses, the downside loss is very small, usually much less than they put into the evals. You know, if somebody's putting 30K a month into evals and then they finally pass and you give them 20K to trade with, imagine you're still in a net positive from that trader. And then you're gambling on them. If they make money, I make money. If they lose, I still made 10K from the trader. That's how I'd start a prop firm. I would eliminate the sim funded step. Do I know Sage? Yeah, I know Sage. Yeah, that's it. Where the lines are marked on NQ. This right here. Oh, this is just, sorry. That's just kind of floating in the middle. I was trying to do this. This is called impact red line. So, or illiquidity pivot. I'm just marking the retracement level. So it looks like we are pressing in a bull market. And I do like it because I'm sitting here watching my options trades. Just chilling. What is the rain trading model, PJ? I don't know what that is. Could Netflix be pulling the market up? Doesn't seem like others are wanting to go up. It could be. Doesn't Netflix have earnings on Thursday? And Nvidia opened bullish, by the way. So Netflix did have an MHP break, which is good. Nvidia also bull long up, which is good. Your tech stocks are giving us some love today. Microsoft is the one that isn't. Tried to break and is pulling back. Apple kind of in the same boat as Microsoft. Not all the stocks are in that real big bullish exposure level right now, but things are pressing pretty good. Normally my long trade in this environment goes all the way up to this band and I usually call it. Outside of the band, I need strong long pivots to trade off of. Now that I'm calling the market to sell off from here, but I am avoiding any trades from here because I need a confirmation. Trust me, wherever I want it to go, it will go there. That's the rule. And where I want it to go right now is here. A short setup does not apply right here. Now, one could argue that this is less than half. There's a possible short setup, but it's so close, I don't want to take the trade. Anything right here is a confirmed sell-off if we do break there. I'd like to take the long from here to here like I do every single time, long and X, so I'm going to wait for that. Trust me, whatever you want it to go in a volatile market, what the saying is, it will go there. So we wait for it to go there. I have no intention on giving up my... Oh, I'm sorry. Let me update the photo. $7,000 by risking anything else. $44 buys me a steak. Half of a steak. Third of a steak. Wherever I go. 10th of a steak. The futures desk is exactly that. Yeah, that's why I sent them a message and I told them I'd like to check them out and have a chat. Did they write me back? Wow, 530 viewers. We've been sustaining 500 more and more and more every day. You know, just to think we had 80 people watching us last December. Where'd all you people come from? How'd you get in my room? By the way, the saga of the keys. Okay, so I came in this room. IDOC is convinced there's a ghost in this house, and I hate to say it, but it's like, this is a brand new house. It's like, where would the ghost come from? Unless it's built on top of like a native burial ground or something like all the horror movies, right? We're disturbing somebody's peace. We found like janitor keys in here. I'm sorry, not janitor keys, but it felt like, you know, janitor has like a million keys. There was a million keys. They were all labeled like storeroom, this room, that room, this room. And then there was like a Harley Davidson key. There was a Harley Davidson keychain. There was a Toyota car key just sitting here. And I'm like, are these your keys? Because your parents have a RAV4. She's like, no, those aren't my keys. I'm like, whose keys are on my desk? It's a wad of keys. And we're like, okay, let's call that. We had 2 AC guys come out. Let's call both of them. One of them, they came out and worked in here. He was like, no, it's not mine. We called the housekeeper. It's not hers. The people that installed my sign, it's not theirs. We had one more air conditioning guy come out before this guy, the other guy came. And if it's not him, I'm gonna freak the fuck out. Because I don't know who is missing keys, number one, and who isn't trying to come get them. If it's a demon, he's cool because he drives a Harley. So we would be cool. I'll show him my skull lamp. We'll be buddies. I'll be like, bro, look, I'm cool, man. You can live here. It's all right. Just keep it quiet. Now, if I walk downstairs and Pickle's like barking in a corner or something, I'm going to fucking move out. But we have no idea whose keys these things are. All right. Market's moving to IP, trying to break through upper DD band, which is nice to see. S&P's still rolling towards its band, finishing off its trade right here. Ratio still less than half, so kind of nervous on that one. Get a house blessing. Yeah. When her dad comes into town from Vietnam, we're gonna get the priest to come out. Just like, you know what I mean? That's what she said. She's like, we're bringing the priest over. Did I keep a bowl of keys in front of the house for your guests? LOL, right? Check under your bed. Don't tell me stuff like this. Check in the attic. Question iDoc more. Yeah, exactly. I should be questioning. iDoc. Who you brought over to my house that has a Harley? Don't put. Oh my God. She's been fooling around. And not letting me watch. That's really sad. Upside down pineapple on the door. Yeah, I always wonder what that means. Why did she put that out there? Oh. About in the stream early. That's funny. Though I'd be cool with it. I mean, if she wants one, then I guess I get one. We have to trade. We becoming like a swingers parties over here. When I'm busy playing Elden Ring with my headphones on, she's sneaking in handsome biker dudes in leather jackets. I see what's going on here. Well, two can play at that game. I was kidding. This is not erasing. But yeah, we have no idea who the keys are. I came home early, had to jump out the window, left his keys on my desk. He was here admiring my computer. Who's the guy with the screen mask behind you? Baron, don't you do that. Don't you do that to me. I'm betting that it's the one air conditioner. Because who else would come in this room? And they were in here testing the vents, so I don't know. All right, I think bull market up to this 54.91 area, looking pretty solid. I don't have a good entry from here. The R&R is pretty bad since there's 20 points of drop for 15 points to go. I need to let it pull back. What else is on the keychain? A bunch of keys. People help the lighting. That's what I think we called those guys. And it wasn't theirs either. Elon talking about tariffs. You know, I missed that. I need to catch that one. I need to see that. I want to hear his thoughts on this. All right. So what I'd like to see is the interaction from here back to there, which problematically, if it does fall to here and does retrace, I would X out for good and let it really prove that it needs to hold. It's rare that the market breaks MHP and keeps going. It's 10% of days. So the market's going to try its hardest to get back below it, which is why I'm waiting. We know the rule here. So breaking MHP, there's always a retest. And if there's not, I just miss out on the upside. But I do have my options trade that would love to benefit from any upside. So I'm kind of hedged in both ways. If I sit out, I don't miss anything and the market moves up higher. There we go. Thank you, universe. Let's see what's going on here. Who's talking? I love as I'm saying things are happening. It's a news event. Nope, nothing. Who talking right now? Trump tweet something? Hold on. I need to start following Truth Social. Donald Trump. I need to add this to my list of... No, Trump isn't saying anything either. I know. Perfect timing. Like, I love when the market completes my sentences, you know, when I say something. EU expects US tariffs to remain as discussions make little progress. Oh, okay. That's what it is. Reversing this market all the way back down to my pivot. I'll try it in like one account. Let's hit that EP. Let's get my MHP though. EU expects. Wait, who's the person they're talking to though? I'm gonna hit it with this one. Like who? Like who's EU? Who's EU? Who's speaking? Let's see. Again, that could be like game-changing news to go the other way, but I don't want to bet super hard against this. Just take a pivot off of hedge pressure. As discussions make little progress. I could be betting against the bigger bull news here. I don't want to be too crazy about this. Bigger bear news, but I always take the long from here if I can get it. Just playing with one contract just in case. They need to provide a dip opportunity for their friends. Let's see. Gotta love how that came out of nowhere. So I broke all the way back through the side I wanted to be on. Let's see if I can get a bounce off of this though. That cleared right through my stop already, so I'm giving myself like 5 more points and I'll just close it. Stocks started dumping on that news too. It's not the best, but we'll see. Who? EU? Like, who's the who's out there? That's what I'm saying is like, I don't know who's even talking. EU, like, where's this news coming from? Who's actually saying something? Is this just a correspondent in some EU news outlet? Like, that's what I'm saying. It says EU expects US tariffs to remain as discussions make little progress. I think that's bullshit news. Whatever. We'll see. I feel like it's bullshit news. We'll see. We'll see what comes of that. Like who? Like who's speaking? Who's saying this stuff? I ain't taking shit. Like who? Who's EU? Who in the EU? Which country? Which person? This is some garbage news outlet, fake news kind of stuff? Who the fuck's saying something every single time? Give me my fucking money. News from Europe, but from who? Who's the source? What's the outlet? EU expect, who's talking right now? Am I missing out on a talk? Is there a symposium, a news event? No, news from Europe. No, I know, visualizer. Who? Jesus Christ, who the fuck is talking? Who's speaking? Who? Who in the EU is you? Who in the EU is fucking talking? President of this country, or some schmuck on a news outlet? Like, is this an opinion? Is that who? Who's talking? Who's on first? Victor, goddammit. Victor, stop spreading fake news. I knew it was Victor. But who is the one, whose opinion is this? Very important. EU expects US tariffs to remain as discussions make little progress. Who said this? Is this the prime minister of this country? The king of this country? The emperor of this? Hello? Whoa! Pickle, are you spreading bad news about the market? Oh my god, Pickle. Oh my god. Whoa, whoa. I'm trying to hold it. Freaking mythological beast here.
He's excited.
He's really excited. Well, he smells sausage and pancakes.
Yeah.
Hey, broski. Alright. Go. Go with mama. Who thinks this? I've traded long enough to know that this is probably somebody on some news outlet or something. Like a journalist somewhere. I've got connections to Parliament and, you know, talks are breaking down. It's this bullshit news. Who is talking? Who is it coming from? Is it from the EU trade chief? Okay, that's what I'm looking for. Like, who said this? That's very important who said this and why they said it. Okay, thank you. That's what I wanted to see. Let's see what they said. EU ready for fair tariff deal, but where, can I see the news that you guys are sourcing? Grok says it's probably Ursula von der Leyen. And, Vladis, or is it Maros? Whoever is the top dog, you can't assume anything. Don't assume. I've learned in the news. Don't assume anything. I want a source. Somebody provide me a source. Is it Jim Cramer? The news is. Can you provide a source visualizer for the last time? Somebody give me a something to read. Give me a source. Who? Give me something to read. I can't find it. Check Bloomberg. I ain't checking shit. I'm streaming. Y'all check it for me. Help me out. Please help me out, man. Jim Cramer's the one that said it. Yeah. Check the headline on Financial Juice. Did I overlook it? It still doesn't say, unless I'm missing something. Somebody just go check. Todd's doing the Lord's work over here. It's certainly, if it's the news, it'll be on Pornhub, so it should be over there. You see it on your Financial Juice? Let me check it really quick. Why don't I see it on Financial Juice? Oh, here it is. Oh, because I didn't scroll up far enough. All right, here it is. Finally, it came through. Okay. European Union, United States make progress resolving trade disputes. Make little progress. Oh. You could expand? Oh. Well, I learned something today. Well, there we go. See, I'm not that smart sometimes. Me not smart sometime. I didn't know you could expand this. Okay, again, I need to see the source of this information. I always want to see the source of who published these things. And I don't know where their source is. I'd still like to see the source, though. Bruh, I wouldn't know. It doesn't give me any, hey, I'm a UX kind of guy myself, okay? I need a visual cue to tell, like an arrow to tell me to click on and expand. All right. This week, the EU and United States military progress resolving trade disputes with officials of President Trump's administration, indicating the majority of tariffs in the Union will remain in place. Huge Trade Secretary Sefcovic, I can't ever say his name, left the meeting with little clarity in the U.S. stance, struggling to determine the American side aims. According to people familiar with the talks, he met for about 2 hours the U.S. Commerce Secretary and Greer in Washington Monday. Yeah, but here's the thing. That's fake news, though. Because the tariffs are paused, regardless, for 90 days. He's talking about something that's going to happen 90 days in the future. Right? So tariffs will remain is something we got 90 days to decide what's going to happen. Is that untrue? By the UX developer? The chart don't look fake. The tariffs are still paused for 90 days. Not today's chart, but the overall move of the market is that we'll figure something out in the next 90 days, right? It's not enough for large business. No, it's not. 90 days is not for businesses to plan for. 90 days is for Trump to just say, okay, this is what we're going to do. You guys gotta understand how the market moves on news. I've been doing this for a long time. The market is not going to care about anything other than what Trump says he's going to do. It doesn't matter the logistics. It doesn't matter if the businesses are going under. It doesn't matter if anything happens. People are going to listen to what Trump says he's going to do. Markets move on speculation and rumor more than they move on news. Right? Any uncertainty is concerning, but Francesco, you're 3 months behind on that. That's already been priced in. The uncertainty is where we are now. Remember the all-time highs in December? And now we're kind of corrected in January. The market's already pricing the uncertainty. It started pricing it in 3 months ago. It's very late to the market to assume we're pricing in any further uncertainty. Market is always forward-looking, right? So you're right. The uncertainty is already, that's why we're here now. That's why we're down here. You're 100% right, bro. Here. With further speculation, everything's hinging on what Trump says he's going to do. I agree with you. The logistical problems are bad. It's going to take companies years to adjust, not even months. I'm talking years. Multiple quarters to adjust. I think this is fake news today. Not fake news, but fake market move. Response to news. I don't think this is going to change the trajectory of today's market. I think the market's still stable and decent from here. Essentially, Trump has 90 days of a pause. Market cares about that. Somebody's opinion that we're having a hard time working things out. This is what 2016 to 2020 trading was. If you were here, raise your hand if you were here back then. It was the same shit. Do you guys remember? We're not working it out. Oh, we're working it out. Oh, we're not working it out. Oh, I don't think it's going to work. Oh, it's not going to work. You remember this? The opinions of what people think is going to or not going to happen just moves the market up and down. Small moves. It doesn't correct the market. It never did before. It's the same shit, different day. Mark remembers, right? It's when I say fake news, it's a fake response. The algorithmic pullback makes sense. But if Trump's pauses for 90 days, the market's kind of like waiting for him to say, yep, tariffs are back on. If Trump says we didn't make progress, then the market's going to respond pretty crazily. But right now, this is just somebody's opinion about what the talks, little clarity on what's going to happen. It doesn't mean that Trump didn't have a plan or something, right? Same stuff, different year. It's the same exact stuff. Same president, same everything. So it's like, my question is, should I buy MHP just for fun? I'm like, but we did open below it. So it's not really news because nothing's changed. It's just there's no clarity on the outskirts of it, or the outlet of a meeting. That's kind of what it's saying, right? they've made little progress in resolving trade disputes. Well, that's what a dispute is all about. You get to the negotiating table and you're trying to make progress. They've made little progress because they haven't come to an agreement yet. But this is the same shit with China we had years ago. You guys remember? We're making little progress in the trade war, and then 3 days later, we figured it out. Trump just goes, yeah, we got a plan in place. Market goes straight up. So if Trump just says, don't worry, we got a plan in place, we'll figure it out, the market will go straight up. And that's what it's been like. The people are just sensitive to the tariff stuff, like very sensitive to it. That's how I feel. So not that it's fake news, but it's fake news. It's not real news. It's somebody's opinion that the deal is not going in their favor, and Trump's not going to back down. He's going to tell them to fuck off. Should I buy the dip here? Should probably buy the dip here. Fake news. But I don't have a pivot to long off of, though. I want QQQ to get above LP, and I'll take the long. So I'll take a long on QQQ on a second break if I can get it. So the whole point I'm talking is to kind of like tell you the opinion I have of how the news is going to act on the market. I don't think that's market direction changing news, to be honest. Because this is the same song and dance as we had before. Of course, they're not going to resolve the dispute in like 3 days, right? Trump has paused the tariffs because people have walked up to the negotiating table. So he goes, all right, so this is the, you have to think of it, because remember, I've been trading a long time and we did the same song and dance. It's no different than what it was back then. It's the same exact song and dance. The market is moving on that news. You guys are, y'all must be very new to trading with Trump. The market always moves to news, but it's the algorithms are responding to what it believes the pricing should be. It's my determination to tell you it's fake news because the news is not going to bring the market and crash it out. As a trader, I have to make that assessment. And I'm using the history of what I've been doing, right? The idea is that it could come down. I don't think it will. I think that when I say fake news, I mean, it's real news, but it's not reversal news, if you may. This is a fake market move, a bear trap, if you may. Squeeze some bulls out. Technically speaking, we could still lose monthly hedge pressure and sell off. I'm perfectly flat right now. What happens is Trump said, we're going to tariff everybody unless you talk to me. And everybody came and talked to him for the most part. Except for China, I guess. And then he said, good, I'm going to pause the tariffs for 90 days. You got 90 days to work out a deal with me. And in the first 3 days, they're like, it's still uncertain. We haven't solved the problem. Well, yeah, it's 3 fucking days since they paused it. Like, chill a minute. Chill for a hot minute. Of course, that's the whole point. You got 90 days to work out a solution. So the idea that it's unclear what's going on is not like, oh my God, tariffs are back on. They're still on. They're just paused. Right? That's how I feel. So as a trader, you got to think 3 or 4 steps ahead. My bet is if you're like, oh shit, let me short this. This is what I'm trying to say. That's not the news. That's not the short market news. Am I making perfect sense here? Does this make any sense to you guys? Y'all are 100% correct. Remember, in trading, market price is then speculation. It doesn't price in the news. So you have to speculate further. As a successful day trader, you got to see 2 steps ahead. You see what I'm saying? The question is the market going down on this news? Absolutely not. Absolutely not. No. The market will go down on its own accord, but this isn't news to bring the market down. So this is not actual. There's no change in anything. Nothing's changed from 20 minutes ago until now. This is a meeting that took place on Monday. Say Monday? Yeah, this is a meeting on yesterday. And you're not going to have a lot of progress done in the first meeting. That's not how Trump works. Trump is stubborn, and it's going to take a little bit for them to work something out. This is what it was before. I remember in 2017, whatever it was, where it was like, we've made little progress. The news loves to say shit to embellish further what it is. We've made there's little progress in Chinese and American talks over the trade war. Little progress has been made. Stuff like that was said all the time. And the market would sell pretty hard for the moment. And then it would fall and fall and fall and fall, then rally back up the next minute. Or Trump would come out and say, that's fake news, progress has been made. What are you talking about? And then the market goes up. We're like just hinging on the discussion. But what I remember back in the day is that the media will blast things out of proportion, and Trump will just say something and the market will follow what Trump says, and still stick to that mentality in 2025. It's the same thing that's going to happen. So it's kind of like, imagine in like an hour or two, Trump says, I believe great progress has been made. I don't know what they're talking about. What do you think the market's going to do, right? The market is trying to be where it wants to be, away from the talk news. That's why it's moving on its own technical accord right now and not really trying to pick a direction. It's following the price of the stocks. And while I do think the market takes a quick little dip, I did take that perfect setup liquidity pocket anyways, which all I care about is scalping from place to place. My only question now is, should I buy one more time from here? That's the question. Problem is with Navarro and Lutnick, who claim EU should also cancel VAT. That is nonsense. Francesco, you're 100% right. Yeah. On the front, I think it's going to be hard for them to resolve a deal. But Wall Street isn't going to care. They're only going to care about what's being said now about the rumors of the possibility. If the possibility is there that things are going to come out favorable for us, the market's going to go up. Even if it doesn't really happen, even the logistics don't make sense, Wall Street won't care. Wall Street needs that hot, speculative rumor on its face right now. That's all it needs. Like, what is the moving mechanism of the market? And of, all the countries that exist, everybody's not going to want to buckle because Trump is very stubborn. He's asking for a lot. But at the end of the day, I think they'll buckle because I don't think anybody wants to deal with the tariffs from us. They're just holding out. So it's a game of chicken. Who's really going to... So again, you see what I'm doing? I'm speculating on like what's in front of us and trying to say where we are. We're at a stalemate in talks. We just started talks. Which side's going to buckle? Are they going to buckle? You have to start thinking of that, right? And Wall Street's just going to move on that news. It's not moving on the logistics of tariffs and anything like that. We have already priced in the logistics of tariffs going in full force. And the market's trying to decide what's the likelihood of those tariffs still being there. If the tariffs are still there, the market's going to stay put. It's already priced it in. What people think is that if the tariffs go into place, that the market's going to crash from here. It'll take many quarters of bad news to continue the crash of worsening news. Wall Street has already priced in the effect of the tariffs. That's where we are. If the tariffs stay put and there's an equilibrium and nothing gets worse, the market's going to continue to go up from there because people are going to start to improving it better. Wall Street will be pricing in the next worsening. Earnings come out and it's bad. Earnings come out, it's worse. Okay, now the market's going to find more legs down. But from here, we've already priced in the full effect of everyone gets tariffs blasted in their face. Does that make sense? So now the question is, Wall Street's deciding, are tariffs going away? The likelihood of them going away, the market's going to inch back up and price in those companies that won't have the tariffs affecting them. Do we all make sense, right? You understand, trading is about speculating. Legacy's in a short and will work out, bro. I hope you get your trade. I hope all you guys bank today. It makes me happy to see y'all make money. Y'all been fucking crushing it lately. Y'all really have. I'm happy to see it. I'm always happy to see it. What do you guys think? We've already priced in the tariffs. The market's just deciding two paths from here. Are the companies actually going to get worse? And we're going to have to see quarterly report showing that. We've already priced in what we think is going to happen. The data needs to come in and prove us wrong that we underestimated, and the market will fall further. There's no more bad news to come out. Even if they're like tariffs are still on, it doesn't mean we crash from here. It means we're going to go back to lows and stay in this range until things happen. If Trump says 90 days no deal, the market is going to stay put. It already is priced in no deal. That's what the low was. This is what I want you guys to understand. Wall Street is always looking months ahead of things. We've already priced in. The volatility came from us pricing it in rapidly. The market has figured out what the value is of the tariffs. We are there. Okay. We are here. I think what people and newer traders are going to think is that if the tariffs stay in place, and I guess this just comes through lack of experience, that the tariffs stay in place, that the market's going to do this. It's not exactly true at all. If the market's going to go lower on the tariffs, it's going to have to go lower quarter after quarter after quarter, just like a normal bear market, to watch conditions worsen when you get proof that it's worsened. Right now, the quants of the world have calculated this is how bad it's going to be, and that's why we went straight there in the market. Once your volatility starts to decay out, it shows you this is the price of tariffs. I'm going to put a big T right here. This is the price of tariffs full force. So the market would likely kind of hover there and play here, and then any good rumors or news will kind of bounce us up, and the market will continue to try to hover that area, and then years could go by, and the market will take a slower time to sell off. A lot of people, I think newer traders, are going to think the market's going to crash if the tariffs are back on. And the market may crash that day, but the market's already priced it in at these lows we found. We actually overpriced it, which is why the volatility went crazy as we squeezed people out. The market's just bouncing off of that overpricing, and now we're stabilizing somewhere in the middle where the tariffs are going to be. So market is like crash, 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 pop, stabilize here, and the tariffs are back on. We'll probably get that big nasty day like this. The market will do that and then be like this, and then kind of sit here waiting for quarterly earnings. If they're bad, it's going to go down. If they're good, it's going to go up. And the market's going to continue to follow a slower trajectory down on tariffs remaining. That's kind of how it's going to be. I think, whenever you get markets hitting circuit breakers, Little Blue, think of it like this. That's your overreaction. You wouldn't be hitting 7%, 6% moves in the stock market without. Think of COVID, right? Every business is shutting down. Yeah, you're going to hit a circuit breaker. Okay. Commerce goes to zero. Commerce doesn't just get a 20% tax on it. That's a whole different story. So when you're hitting circuit breakers, which is absolutely ridiculous for tariffs, ridiculous. It's not global trade's not going to halt to zero like with COVID. That hits circuit breakers. That panics the market. Everyone's shutting down. Okay, bank run on the market. To hit a circuit breaker in a tariff is an overreaction. So what we care about right now is the actual speculation and news. Looks like there's something else being said. It's news-driven garbage is what it is. Is that right now? Wait. More news. No, I mean the market, the fact that you move 6% in a day is an overreaction. There's nothing that justifies a 6% drop in the market in a single day, which is created by short squeezing. I don't know what just happened, but I should have bought that dip one more time. Having a great session. Yeah, I'm up pretty big today already. Y'all get it right. The fact that you exhaust the downtrend in a circuit breaker, that's the overreaction is what I'm saying. Tariffs should price in rapidly, but we shouldn't have gotten to that degree. The market shouldn't have been crashing on tariffs. That's the overreaction. Batshit trade policy is good reason, but circuit breakers are market collapse events. Like, even bad news, like, is not enough to hit a circuit breaker. It's such a rare event. To get close to 7% drops on a tariff news and crap trade policy is absolutely an overreaction. Because think of it like this. Everyone's like, companies are going to have a hard time adjusting, blah, 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 blah. COVID, we're shutting your business down for a month, maybe longer, and we're disrupting trade to fucking zero for you and all your partners, because the logistical bottleneck from this will last for a decade, and you don't know it yet. I knew it. You don't know it yet. I'm speaking third person, the person that's talking to the world. I'm shutting everybody's business down, and I'm interrupting all your supply chains, and I'm going to disrupt trade for you to zero for months. You will have months of back orders. You will have years of backlogs, and we'll have a decade of inflation. Yes, that will trigger a circuit breaker, 100%. Everyone goes to zero. That's market panic. We're going to make things 20% more expensive. Some things, not all things, and just from some countries. Oh my God, market's going to zero. Fuck that. This is newbie trader shit who think that. Newbies. This is a mild news event. We got close to circuit breakers. I'm laughing my ass off. I'm like, on tariffs? I've been trading almost 2 decades. This is a ridiculous oversight. Pricing down, yes, but 7% in a day, no. There's 0 times I can remember in history that the market overreacted to a milder news event. A COVID, yes. A tariff, silly. So that's how I know the market overreacted, because it got so close to triggering circuit breakers. That was a panic event that caused a chain reaction of selling. It's not people running for the hills that this market's going to be priced. Nasdaq's going to 10,000 on tariff news. The idea that it can go there is going to have to be proven by further subsequent quarterly reports. And we know that because in 2008, everyone knew that the housing market's going to crash, but the market fell like this. And after like a year of doing this, then it crashed. And then it recovered immediately. So the idea that markets don't just fall to zero on bad news is something like experience will just tell you, right? The market doesn't have trust. It's the same song and dance as always been. The market doesn't have trust in the government, doesn't have trust in anything, doesn't have trust in Trump. But Wall Street needs the proof. They've already priced in what the tariffs would be. They have to price in an undersight or an oversight further. An example where it's set 19,000 NASDAQ and market drops 17,000 because tariffs are back on. Okay, and we're going to sit there. Then it's going to hover there because that is the price of the tariffs. And then the earnings come out of Apple and the earnings are 10% lower than what we thought it was going to be. Then the market's going to continue to decline on further information. It needs new information to the system to continue to push it lower. The information told us that this, where we bottomed out, was the overreaction. Where we're sitting right now is the overreaction to the overreaction. And somewhere between the low and somewhere between this week's high is where tariffs are quote unquote priced in, right? Tariffs are priced in somewhere right here. That's it. That's it. That's it. Get all these. That's my, let me get a better chart. Am I making sense to you guys? The fact that you hit the circuit breaker is your evidence that we overreacted. We well overreacted. The price of the tariffs are not going to be here, and they're not going to be here. They're somewhere about here. If we were to say tariffs are back on, the market's going to comfortably sit right here. The market's not going to do this. It shouldn't do that unless it's overreacting again. The overreaction was weird. The market crashed, and usually the crash portion of the market is the end of the sell-off for now. The market had its crash in circuit breakers in COVID. That settled us out. Hey, here's the same song and dance in COVID. Hey, guys, we have lack of certainty and lack of trust in the government. We don't know what's going on with this virus. It's killing people. No, it's not. Yes, it is. Yes, it is. There's talks about it. There's talks about this. Fauci thinks this, and Trump thinks, or Biden thinks this. And oh, is it the same thing as the tariffs? The same exact talk. EU thinks that. America thinks this and nobody knows what to think. Oh, flu season's coming back. Biden's president. He's probably going to shut everything down because Democrats want to shut everything down again. Market's going to sell off again. Biden's president now. We don't trust the Democrats are going to shut everything down. A second time wait, it's still rallying, right? Wall Street is trying to figure out what's going on. And the reason it rallied is because right here, Wall Street deemed COVID to be fucking stupid and a fucking hoax. And I had it 3 times and COVID was a hoax. Okay. It was a flu and that's it. I had it 3 times. I had the worst COVID too. And Wall Street figured out it was a hoax way back here, which is why it didn't believe any of the garbage that we're going to shut things back down again. I say not a hoax. It was a real flu, but the marketing of it, a global pandemic, was a hoax. It really was. And I've had COVID 3 times, and I was patient 0 with COVID. I had COVID back here when people thought it was going to kill me. Everyone on the stream was sending their condolences. I'm like, where do I send flowers to your family? I'm like, I'm not dying, even though I've got COVID. And I feel like I'm dying. We're going to be fine. Everyone loses grandparents to flus every year. And no disrespect to anybody that family's dying COVID. It was a flu. And flus do kill the elderly and young people and unhealthy people. It's part of life. But COVID was not a global pandemic that killed tens of millions of people. The marketing of that was a hoax. And Wall Street told you it's a hoax. I don't think it's not my opinion. Wall Street told you it's a hoax. I had it 3 times. Because Wall Street said, this is not a global pandemic. Back here, Biden's now going to get elected. And we know the Democrats are going to shut it down again for the second flu season. COVID's coming back around with a new strain. New strains of COVID, guys. And then Wall Street was like, no, it's a hoax. And then they knew it. They knew we weren't shutting it down again because they knew it wasn't actually a global pandemic that was going to kill everybody. And the business, again, we have to think like traders. We're not thinking like, let's put our kid gloves on and babysit people's feelings. We're thinking like traders. Wall Street said right here was a hoax and they didn't care. All the rumors, it's back on, we're selling off, lack of the government, transparency. We don't understand this. Maybe the vaccine won't work. Maybe it will work in the market. It's the same thing as the tariffs, you guys. It's the same thing right now. People are overreacting to a change in price of stocks. Tariffs are not a hoax. That's the difference. Tariffs might be here to stay. So tariffs, we're trying to price in orderly where we should be, and then we hit the crash portion of people overreacting, and the crash usually exhausts where the move is. When the crash starts, which is here, and where the crash ends, which is here, you've priced in somewhere in here. The value of tariffs is somewhere in here. It's not down here like people are like, oh, we're going to continue to crash. No, this is it. We've got about a 20% correction, which immediately we rushed to. The fact is that this exhausted the move. And so no tariffs is here. Tariffs is here. Conditions getting worse quarter over quarter. Then it goes lower or longer. So it will take years to bring the market. Like if tariffs are back on, it will take a whole year to break Wednesday's low. I've traded long enough to know this. It's exactly how it works. Right? You think I have COVID now, but you need a test to tell you I'm sick. You know you're sick. So this is where I want you guys to understand. If now 2008 will tell you the same thing. Again, it's the same song and dance when it comes to news versus Wall Street. Been there before. You guys know people thought that the housing bubble was going to pop in 2005 is when Michael Berry started his trade way back here. The adjustable rates were kicking in 07. For most of the people started defaulting in 07, and the market still rallied and still rallied and still rallied and still rallied. And then was starting to hit the waves of, okay, the bubble's about to pop. And it took a whole year. The adjustable rates kicked in here. It took 2 years for the market to crash when everybody knew it was going to crash. So it's like, even when the bad news was happening, so this is when the rates kicked in and defaults started rising. This is when the smart traders in the room, like Michael Berry, started to big short, BS. They started shorting back here, and they got squeezed, and they got squeezed, and they got squeezed, and they were right. Defaults were skyrocketing in 07 and 08, which is why the market started going like this. And then finally it started selling off and there's the overreaction. Okay, we've priced in the mortgage crisis. And then it rallied for half a year while people were like, it's going to get worse. It's going to get better. It's going to do this. It's going to do that. And the market just was like, what the fuck do we do? It took a whole nother year for the market to crash. And it took Lehman, Bear Stearns, and banks to go bankrupt, which was new evidence, new data to the set. Crashed the market. Guys, we priced in the housing crisis here. So let me ask you if you learn anything right now. What caused the crash in 2008? If you say the housing crisis, I'm going to come to your house and throw snowballs at your door. What caused the crash in 08? It wasn't the housing crisis. What was it? That started the problem. But what actually made the market crash in 08? Tell me if you know now. The housing crisis was priced in here. You priced in your tariffs. That's here. An overreaction to bank failures. Banks were failing. Thank you, guys. Y'all got it. No, the bank's failing. That's what caused the crash. The economy tanked, and right here, your economy tanked. We've priced in that right here. It's the banks failing that crashed the market. Thank you. You guys are very smart. It's not the bad news. It's not the bad speculation. It's not the bad news. The housing crisis priced in with a very healthy correction. But for some reason, the overexposed banks were starting to show signs of failure, which panicked the market. And we went right back to the price of the market of the housing crisis. We went right back to it after the banks crashed. Wall Street is very efficient at pricing in bad news. Your housing crisis is 1300 S&P. That's it. Your bank crashing crisis, your bank's failing crisis is right here. Now you guys get it, right? A new set of information is what crashed the market. I hope you guys learned something here. New information. It took new information to crash. When people say the housing crisis crashed the market, no. Overexposed banks failing due to the housing market crashing dominoed their exposure into default and failure, and then that crashed the market there. And then once the banks got their bailout, we went right back to the housing crisis level. You can actually label your chart this way. This is your housing crisis level here. This is your bank's failing level here. This is your bank's unfailing level when they got the bailout. So we undid the did and went right back to the housing crisis, which is where we should have been. This was a craziness on new news. It was a new event. And then ever since the banks got the bailout, we returned to the housing crisis level and stayed there for 2 years, 3 years. And then the 4th year we rallied. And it took quantitative easing and other things to get us there. All right, so let's put the same context of the tariffs. This is the psychology of a market crash. And I'm an expert at these things. I've been doing this too long. So I got to pass the information on to someone else, okay? The market has created its pricing of tariffs. Aha, here's the tariffs. We are good. And as long as the tariffs are in play, we bottomed out. That's the bottom of tariffs. And the market's going to respond up and down to the news and then probably like move up here. And then if Apple files bankruptcy because of the tariffs, and oh my God, Walmart files bankruptcy, then we're back down. Does everyone here in chat understand this? Tariffs will not crash the market, just like the housing crisis won't crash the market. Exposed banks and now exposed companies to the trade will crash the market. Once they fail, yes, it's new information needs to enter the system. The tariffs, guys, have been priced in, just like the housing market has been priced in. And if Apple and Walmart crash, the market bottoms out. It'll take 2 or 3 years to get back up to here and then 5 years to rally. Sure. But that's how it works. I see a bunch of newbies out there saying, well, when Trump puts the tariffs, maybe they're not going to work. And I'm betting on 4,000 S&P. Thank you. Just write me a check if you're going to be such an idiot with your fucking money. Just hand it straight over to me. Save yourself the headache of losing it to me in the market. Dumb. You need new information, and new information is not tariffs are back on. That is the information. That is what we've priced in. New information is that Walmart expects quarterly earnings to be down 40% due to tariffs. Okay, that. The things that are new that are going to come in will crash the market further. Panic is over with. Oh, we can't work out a trade deal. Oh, it's not moving fast enough. Wall Street don't care. Look at this. EU thinks this. Oh, Iran thinks this. Oh, China thinks this. It's already been priced in. The opinions are just going to move the market like this. We did the same trading 8 years ago. I learned how to trade it then. I learned the hard way. I was like, oh my God, the bad news, the tariffs are back on. Let me short the market. You know, it was like, no. Oh, we can't work out a trade deal. Oh my God. Wall Street's already priced in not working out the trade deal. That was 2 weeks ago trading. You guys are 2 weeks late to the game if you still think tariffs back on, crash the market. It'll just maintain lows. You got to get weeks ahead. They don't even allow default swaps anymore. Don't they have like new instruments though? Didn't they rename the CDO to something else? There's like a new version of a CDO. It's called what the hell is it called now? They renamed it. CLO. Yeah, they just renamed it. What is No, it's a bespoke. It's a BTO, a bespoke tranche opportunity. Yeah. I love the new name. Actually, it's a cooler sounding name. Bespoke tranche opportunity. So like, you know, bespoke means like custom made, right? You like you get a suit tailored or something for you. A bespoke tranche opportunity. It sounds so much cooler than collateralized debt obligation or whatever. Collateralized loan obligations. Rocket scooter. Yeah. Drawing time. Oh yeah, we're getting there. All right, so. Oh, we're not at 500 people. Oh no, people didn't stick around. Are we pop above 500? I'll do the giveaway. But right, so the idea is that tariffs have been priced. I want you guys to understand, Wall Street's very accurate at pricing things in. As the years get by, technology becomes better, information passing becomes better, Wall Street just becomes even more accurate at pricing things in faster. And again, another truth is that circuit breakers don't trigger unless there is chaotic panic, like banks failing to trigger circuit breakers, yes. COVID shutting every business down, circuit breakers, yes. Tariffs, no, but that is a correction. Fed raising rates and Fed going into quantitative tightening, correction. These things will price in the market lower, yes. To crash the market needs to be panic. It's going to affect everybody. And while tariffs will affect everybody, it's just going to make things more expensive. We don't have proof that's going to make unemployment go up. We don't have proof it's going to make GDP go down. We just have proof that your dollar is going to be stretched a little thin. But hasn't it been that way since COVID, right? We've been experiencing inflation and the market still has been okay. So it doesn't mean the market's rallying to all-time highs from here. It doesn't mean the market's crashing from here. We're kind of sitting pretty in where tariffs are priced in at, which does make sense. So for crashes to happen, we need new information to enter the picture, like real news. When I say this is fake news, it's expected they're not going to work out a trade deal in, I don't know, 4 days. But what the new news is that, you know, Costco lays off 30,000 people because of the tariffs. Okay, people are going to start to see shit, companies are failing, and that's the new news. Did we get it? Everyone on the same page? Listen for that. I'm teaching you what to listen for. If they said Walmart lays off 20,000 people, that is worse than any other tariff-related news. Trump may work out a deal, may not work out a deal. Actual impact. You need the impact news that's going to shock Wall Street, something we haven't forecast, something you couldn't predict. Apple tries to build a new facility, but then decides not to because Apple doesn't have the cash flow to build a new facility to do business in America. Apple is going to fucking crash that day. Plans for new manufacturing facility for Ford in the United States. Ford, I'm making something up. Ford building a manufacturing facility in Georgia, manufacturing more cars here to and all of a sudden falls through. Stuff like that destroys the hope of people adjusting or adapting, or new unemployment is going to be what's going to crash the market further. Companies filing for bankruptcy, companies reporting worse earnings over quarter will get progressively lower but won't crash. But layoffs and things like that will create more panic. People will start to realize. Remember, banks were laying people off before they were crashing. If you guys were awake in 2008, I don't know if you were, I was. Yeah? It's nice and cool.
Yeah. So, are you okay with that whistling noise?
No.
No? So he's gonna have to open downstairs.
Huh?
He's gonna have to open downstairs.
Just tell him to open this one. And just see what happens.
Okay.
I can always close it if it gets worse. Just leave that one open. Hey, Pickle. Okay. So, in 2008, banks were starting to lay people off before the crash, before they were failing. Like investment banks were like starting to let people go. You know? Pickle came in to say hey. So we need to see, for markets to continue to crash, we need to see new news. Tariffs are priced in. Hopefully I've drilled that into your heads by now. Mystery key. It's not him. It's not his keys. I wonder who the keys belong to. It wasn't his keys. I don't know. Can the market sell off today? It still very much could. The market's not really getting a lot of momentum from here. It's not selling off either. Not yet. We are destined to be below MHP, which is what has me scared of committing to a bigger, longer trade from here. We did open below MHP, so breaking through is the rare case. But just understand, I want you guys to know this. If Trump says the tariffs are back on, everything's back on, and that you're shorting NASDAQ to 10,000 like you think it's going to crash the market, just be careful. Markets always sell off in a crisis in waves. Markets go up and then they come down, and they go up and they come down. If the market crashes for 1 or 2 days because the tariffs are back on and you jump in right there and buy puts, you're kind of an idiot. If you want to buy puts, you're betting now that Trump doesn't work things out at the high. Just like when the market was low, I bet that they're going to work things out. You as a trader have to get in on something before other people see it and be the first one in. If the tariffs are back on, you're chasing a low for the market crash, you're kind of a numbskull. You're wasting your money and you're wasting your time. You should be betting on a market crash while it's at a high, betting that things are going to fail. Before they fail, you want to be in before they fail. And that's kind of what trading is about, guessing and then getting it right. You got to guess, and you got to get it right. Equities have no wall data since yesterday. Wait, which ones? We're good, like here. Oh, you're talking about the wall data? We disabled this. You're talking about the wall? Yeah, we disabled all manual communication to our server. with all this stuff just because we're streamlining our platform now to be more efficient. Do I not have cameras inside or outside of your house? We do. We do have cameras. And nobody came in other than a bunch of folks working on the house. And none of them have claimed the keys, so I don't know. I'm in no trade now. Nope, nothing yet. I'm still feeling bullish on the market though. Market's still picking up some steam. So this whole talk stimulated from when the market was falling, and I called it fake news, and everybody was like, what do you mean fake news? That's real news. All right, let me tell you. Again, be here to learn, guys. Please. Are those keys yours, Arvin? Remember, it's real news. It's a fake response to real news. It's someone's opinion about the talks not going well. Of course, Wall Street doesn't expect the trade deals to be worked out overnight. People are like, time to short. And I speak up so I can teach people the wisdom of a trader. Time to short. I'm going to scroll up and read the messages, and people said an hour ago, time to short, time to short, time to short. Not on that reason. Maybe a technical reason, but not on that reason. Okay. Hopefully that makes sense. Yeah, a bunch of people. Time to short, time to short. What Matt is saying is don't be reactionary, be anticipatory. As Garrett has said, be anticipatory. 100%. It's possible to be even with fake news. Problem is, and people are talking about what's going on. Is this real? Is this fake? So you have to anticipate, right? That I bought. Right when the market fell, I longed and closed out. I made another trade. We fell to here. I longed. I closed out on that move. Where I'll play because John knows. John was here back then. We were all trading together back then. John remembers the same stuff. This is the same shit, different year. It done change. I've got so much of a vivid memory of those years trading. It was nonsense. I was like, what a circus this market has become. Our president tweeting is now like on my Rolodex of shit I open in the morning. Like in my boot camp, I have to teach, load up financial juice, use your market calendar, use, commitment traders. And then I'm also having to teach and also load up Trump's Twitter account. Why? Just do it, man. Trust me. It's part of trading education now. What's your book on trading? Well, I have a whole chapter on following the presidential Twitter. What a stupid fucking world we live in. What a dumb way of living. And I was like, the market used to be when my history of trading from 2010 was just ebb and flow and nice. And then all of a sudden you have a volatile president that's like up, down, up, down. I'm like, I've never experienced this before. That's such power in the face of the public through your Twitter account to shape the market in a snap. No president before him had done that. And then Biden comes through, and Biden's a fucking potato. He just sits there in a basket of potatoes, and nobody even knows he's the president. He's just so quiet. Nobody even knew he was there. And the market was clean again. It was like, the glory day of bull market. Thank God our president's a potato. Just a vegetable sitting there on the counter. And then Trump comes back in, and then all these new traders that started trading in COVID don't remember what it was like. And the old schoolers like me remember what it was like. You know what I'm saying? We're like, this is a surprise to everybody the way the market is. But John and some of the folks that have been here, we've been friends for almost a decade now. This is something we all dealt with the first time around. The circus was there, and this is the same circus. And just people's memories are short, or there's too many new traders to the game. This EU doesn't think. That's why I was screaming at you guys. What's the source? What's the source? What's the source? Is it just somebody's opinion? Yes, it was. Okay, fake news. Fake news. Doesn't matter. Market's not selling off. Time to short. People saying time to short. Nope. Give me the source. The source is the EU's own representative says trade deals aren't going too well. That's totally fine. Same shit with China 8 years ago. Chinese news says they don't think the tariffs are going well. And then the next day it's like, it was just a news outlet. It wasn't really anybody important. Market goes back up. The source of your news is going to be very important in this kind of environment. Did a giveaway? Okay, we'll do a giveaway. Do you guys get it? The source of your news is the most important part of your news right now. Someone's opinion doesn't matter unless it's Trump's. Okay? To Wall Street. It matters in the long run. We're talking about pricing of the market. Only Trump's opinion matters. If news outlet says we think this or that and there's no credible source, consider it fake. CNN reports Trump tariffs are falling apart. Buy that fucking dip. The infamous V-shaped recovery, the good old days. You guys, this makes sense, right? Yeah, history is absolutely repeating itself. Trust your news source, absolutely. When the news comes out, says EU doesn't think. And when I read that, I was like, I was making a joke. I was like, who the fuck is EU? Who is you? And it was like, okay, you had to expand to see more of it because I know you can expand. EU expects U.S. tariffs to remain as discussion to make little progress. Who is this? Some intern at CNN that has a connection Or is it somebody's actual words at a press conference that they said? We found out that this is probably his words, and we don't even know where he said this. The source is very shaky and shady, and it really doesn't imply anything other than what we expected to begin with. The tariffs aren't going to be solved overnight, and therefore it's fake news. And as a trader, I immediately determined that. You guys see how I was right on the trade. I bought the dip very quickly. And as a trader, you have to understand how to do that very quick. And that's why y'all are here to learn from me, I guess. Benny's like, I am me. He is EU. He is you. I am me. All right, you guys ready? It's not Tradeify today. It's Take Profit today. Did I say Tradeify? Oh, yeah, I did say Tradeify. I meant to say Take Profit, so it's Take Profit today. Sorry. This is Take Profit Day. Once a week, we gotta do our Take Profit giveaway. Hold on, let me do the bot. TPT. Now, I did talk. I have a new connection to TPT that's gonna circumvent the entire. We're gonna circumvent their customer service, which is crazy. But hopefully you guys get it. And I learned this 8 years ago because I learned how to navigate in this market. Your news source is the most important part of this news-driven market. Don't trust anything anybody says except for the horse's mouth himself. Pay very close attention to what the president is saying. Pay very close attention to what other presidents are saying. Expect that the tariff negotiations are going to take a while because our president's stubborn. So is everybody else. But understand this. We will win in the end because we will win in the end. Not because I'm biased towards my own country, but we will win in the end. They need us more than we need them. Which in any Nash equilibrium should form out of that that data set. Like we need them more than they need us. So a Nash equilibrium must be formed where both countries at least get something and a negotiation has happened and succeeded. We can just say, fuck you guys, tariffs are on, and then bye-bye. And then we'll be fine. Like it's kind of like that's where it is. So as a trader, I'm betting that tariffs will resume possibly, but likely in our favor. So no market crash. That's how I feel. Kind of how I feel. All right, you guys, hit that TPT. We won't be doing a giveaway. TPT in chat. But you got to understand, as a trader, hopefully I'm helping you guys see something a little bit more than what you've seen before. You have to be anticipatory. You can't be reactionary in the market. Right? What the hell is going on here? Oh, cool. All right, hold on. 1 second, guys. Hold on. I'm glad to be giving you guys some wisdom. I've been doing this for way too long. So hopefully you understand what makes markets move is the most important part of this, and trusting your news source. Always ask what was your source and who said what. There's always going to be publications. And I remember so many times that somebody would say something and then Trump would come out later and say that was fake news. It's like you get your heart broken so many times. Because you're like, oh, this is it. This is the market crash. Hold on 1 second, guys. I gotta do something real quick. You're back. Hold on. Hang in there. Be right back. What's up? I told him to open the vent. I don't care what he says.
Yeah, you open the vent.
Oh, okay.
This vent is completely open.
Yes. Okay, it was driving me crazy.
Yeah, and downstairs is cracked open at 10% air. That way you don't hear it.
Can you hear it downstairs?
Yeah, I can.
You can hear the wheezing?
Yeah.
No, I don't want.
No, now you don't hear the wheezing.
I just
But
asked you. You
before-
just said no. Downstairs
Downstairs you don't hear wheezing. No.
at all.
No, not right now, no.
Okay. The dampers should work fine. We don't.
He changed it.
Right. So all I'm saying is that what vents are closed?
None.
Babe, you just said 4 different things. You said it's closed, and you said it's 10% closed, and now you said none. Which vents are closed?
None of the vents are closed, but the dampers on the first floor is at 10%.
So all the vents are open.
All the vents are open. The physical vents here.
Oh, okay, yeah. Okay, good.
Dampers are different.
Hold on. Okay. What's up, dude? I know. Well, I know you guys can hear me. Yep. Okay. IDoc walked in here without pants on, so I had to turn the thing off. The guy fixed our dampers. We're super excited about it. Hold on 1 second. Every time they walk in here, I gotta like. I'm so confused because like they keep saying dampers and they mean vents, and she is saying dampers instead of vents. Because when we close the vents, it's like you can hear that wheezing. It was driving me crazy. I was like, I don't care what the guy says. We're gonna leave the vents open. Okay, we're back. Hold on. You ready to go? GP2. Every time they knock on the door, I gotta turn off the camera because you're walking here with no pants on sometimes. Or she has pants on, but well, kind of weird. She didn't have pants on, and the air conditioner guy was here. She had me confused because I was like, get him to open. I was like, if you open all the vents, the dampers should work. But you can also tune the downstairs damper just to permanently close it or close most of it. All right, I'm in no trade right now. Again, letting the market simmer on this. Maybe she's with the key guy. I'm gonna totally like, I'm gonna be passive aggressive tonight. You know, IDOC and I we troll each other all the time. We fuck with each other all the time. We have such a like buddy. She's asking him if there's a guy upstairs in the attic. we troll each other so hard. I'm gonna be extremely passive aggressive to her tonight, and be like, I know you're fucking somebody with the Harley. And then I'm gonna spend an hour trolling her. I'm gonna make her feel really bad, like I'm really angry at her. And I'm gonna come out and say it, and just kidding. Just kidding. She trolls me so much harder. You know, one time we went out to dinner, and she was drinking cocktails, and she had 2 cocktails and was drinking both of them. And she had a guy bring out a dessert that said, "I'm pregnant" on the dessert. Like when we first started dating. I need to get her back somehow. No, I have to get a good one. It's been a while. I've got her good. Maybe I should bring it. Maybe I should like hire a friend or an actor just to pretend like, hey, those are my keys. And I'd be like, who the fuck is that? All right, let's go.
Everything rocket scooter. All you need and all you own. The hedge pressure resilience. Support in the bull zone. Everything rocket scooter. All you need and all you own. Rocket scooter. Rocket scooter's the best. Rocket scooter. Rocket scooter's the best. Rocket scooter. Best.
One winner today. Just one winner today.
Rocket scooter. Rocket scooter. Rocket scooter. Rocket scooter. Best system in the world.
This is for a TPT 50K. Tomorrow we'll do TPT 150K. I've got 3 of those to give out. So come back tomorrow for a 150K account. Luca, today's winner. Congratulations.
Rocket scooter's the best.
Woo.
And the market's turning.
Luca, you need to send me your email in 24 hours. Go to our Discord and message me your email address.
Think a llama, scoot up north.
Congrats. You have a... All right, congratulations. All right, one more person since we're all here. Boot camp. I'll give you guys 1 free pass access to the boot camp. 1 person. If you're not already there, just for the hell of it. Because we had some more time left in the song. While you're waiting, you don't mind hitting the like button really quick.
Rocket scooter. Yeah. Rocket scooter.
Michael, content creator.
Are you a member of the boot camp? Hit the like button. Rocket
Scooter, yeah.
Rocket scooter. Yeah. Hit the like
Scooter, yeah. You're welcome, Luca. Congratulations. Michael, all right. Michael, send Slack some message in Discord for your free bootcamp access. Congratulations. Come learn with us, man. For the team.
Hit the like button.
Okay, so tomorrow is a 150K. Stay here today, guys, for a minute. I'll tell you more. We're gonna sometimes do more surprise giveaways. Tomorrow, 150K accounts. Today was a 50K account. The big ones. Here's what I got to give away this month. Boy, I've got a bunch of Tradeify growth, a bunch of Tradeify advanced. I've got like 10 more 50K test accounts to give out at TPT. I've got 3 150K test accounts to give out at TPT. I've got 4 accounts to give out with Elite Trader Funding. 1 end of the day drawdown, which I like. Speaking of ETF, ETF now has a direct to funded. I saw it on their website. Did you see it? ETF, DTF. I haven't read the rules, but let's actually and they said there was like a limited amount of them. I didn't understand why you can't just buy as many of them. There was like a limited amount. Looks like they changed their website too. Okay. Let's investigate together. ETF, DTF. All right. Yeah, this is great. Direct to funded is amazing. That was fun. Okay. Direct to funded. Let's read the rules. Let's get the rules on these things. 5K drawdown. That's nice. Okay. Where can I see... DTF. Okay. Where's the rules? Oh, details. Okay, DTF. Click here for more details. There we go. All right. Skip the evaluation phase entirely. It's just good. So I trade direct to funded with Tradeify. So I'm glad the ETF has made one. It's very good. I love seeing direct to funded accounts. Very nice. Look at Matt with his music. You like my music? Thank you. Okay. How do you secure? Let's get the rules here. Risk management rules. I wish it was just broken down like in a single table. There's a lot here. Okay. Okay, you must execute at least one weekly trade. Okay, that's normal rule. Just make sure your account is active. Okay. Cash balance will be at the end of the day max drawdown, which is... Let me go back here. Hold on. Let me open up in 2 tabs. So max drawdown, $5,000 for the big one at 629. That's nice. I don't know what discount we get. The max discount with ETF. So whatever discount we would get right now, I'll see if what I get on this one though, but we'll figure out. So I guess you just have your drawdown rule, $5,000, and then you must flatten your trades at the end of the day. After achieving 20% growth, losses exceeding 35%, your total profit will invalidate your account. Oh, so they have that. It's not like the Apex rule or whatever. If you go up really high, like over time, and you have like a big blowout day of 35% of your total, if you lose 35% of your profit in a day, you lose. So it's kind of like a, or it invalidates your account, I guess. So you can't blow up your account by losing too big and just betting on your buffer to hang in there. You can't lose too much too quick. They have payout caps. Let's read. Again, VPN. You can't DCA in your funded account. Oh, guys. Oh, I'm never going to use your service. They did everything right, but this DCAing in a straight to funded account is certainly... DCAing in general is a winning trading strategy. I can't trade something that doesn't allow me. Well, you can just trade multiple accounts and DCA with multiple accounts like I do. That's the way to get around it. Well, no. There's a way to get around it. Hold on. The way to get around it is you have as many accounts as you can have, and then you buy in one and buy in another and buy in another. You DCA in multiple accounts by splitting your bet up in multiple accounts. So that's the circumvent. You can get away. So no, just guys, I give you the cheat on how to get around every rule. So you buy here in account 1, it falls. Buy here in account 2. That's not DCAing. Technically, they can't fault you for that, and they're separate accounts. So split your risk up. If they only let you have one straight to funded account, then that sucks. Don't let you have one? You sure? I haven't read that yet. I had high hopes for this, guys. Or you book the loss and open a new trade. Yeah, you can book the loss and open a new trade. And if they give you high frequency trades, must last at least 10 seconds. So I guess that's the rule around that. You close your account and then greater than 10 seconds later. Wait, no, a trade has to be in for 10 seconds. Okay. Yeah. you can just close your position and then open a new one to go away from a DCA rule as well. So to circumvent any prop firm's DCA rules, you just open the trade and close the trade, open a new one, or trade a second account. That always works. I never trade my Tradeifys together. I am a DCAing master when it comes to prop firms. I have completely gamed the system. That's why I'm doing so well. You can't just trade well. You got to game the system too. Get really good at gaming the system. All right. Maximum payout per user of DTF account is 10,000. After reaching the limit, trading ceases immediately and your account will be revoked. Payout cap of 10K. Tradeify lets you get 15K and then they move you to live. You have a cooldown before you can buy another one. They might move you to live. So it's not too different than like Tradeifys and others. Tradeify is a 15,000 split up in 3. Now, let me see if the payouts are. There's a payout limit each time, or do you just get your... This might be a benefit of this, though. If you make 10,000, get your $10,000 payout. The payout cap is total, not per payout, which is actually pretty good. Doesn't look like it. So example with Tradeify, I can only take payouts $3,000 at a time. That kind of sucks. So I babysit these same accounts for so long. Every payout cycle, I'm like, oh, I can get $3,000 or whatever. So if I can make 10,000 and take 10,000, I actually like that. Luca, yeah, brother, I'll get you right after the stream. 90% keep and no minimum. That's really kind of nice. I do like that. First 12.5 go to you. After 12.5, we get 90%. How do payouts work? Let's see. Let's see if there's a per cycle. 15 days cycle. Each active trading must have realized profits equal to 6% of your best trading day. And in their DCF, they also put their consistency rule. They have their own version of consistency rule. That the bigger you make, the bigger your minimum day needs to be. It's a scale up rule, which it's basically the same rule everyone has. They just do it differently. Is that the more you make, the longer you got to trade. Here, the more you make, the longer you got to trade. Or in this case, the more you make, the bigger your minimum day needs to be, which is their version of consistency. It's a unique way to do it, but it's no different. I don't see anything that says there's a payout cap other than a max cap of 10,000. So if you make 10,000, you can get the whole bunch. That's actually pretty good. Of all the bad rules, that's actually kind of nice to walk in and take 10K. You think mentally that will get people's accounts blowing faster? Probably so, yeah. But to take the risk when you can't DCA, well, can you only have one account total? If you can have more than one account, then that actually helps. It doesn't say total. You have to make 5K buffer before you can withdraw. Oh, let's get back to here. You need $5,000 before you can take 10. So basically, think about it like this. In the sense of what we know, you need to make $5,000 to lose 5,100. I'm sorry, you can lose 5,000 and you need to gain 5,100. Comparing it to the Tradeify, I lose 3,750 and I got to gain 9,000. Actually not that bad of a program. With the ETF side of things, so I get my payout at 5,100. That's basically what it says. I can take the whole lot. I can get $5,100, right? Or anything after 51. Let me see, hold on. Actually not that bad of a design. The safety net amount cannot be withdrawn within the first 3 payout cycles. So you need to make 5,100 and then have 3 additional payouts. Okay. Minimum profit. So 15 days per payout cycle. This is complicated. What's the max payout I can take? Everything after 5,100? Oh, here it is. Oh, here it is. Okay, never mind. Payout cycle. Oh, ugh, never mind. I missed this. Thanks for letting me know. Oh no, I don't like this at all. $1,000. So you have to make $5,100, and then every 15 days you make 1,000, and you get a payout of 2,000, then 3,000, and 4,000, and then you did cap at 10,000 over a cycle, which is how many days? 15 days? 15 trading days, not just 15 days. And the trading days have to meet minimums. Oh my God. Oh, I love ETF, but this program sucks. Nobody's going to use this, guys. Nothing about it. I love these guys, but they just don't get it. They don't get it. This is never going to fly. Two things. It loses a Tradeify in every category. Tradeify, the only thing it beats Tradeify is your buffer is smaller, which is good. But 15-day payout cycles, Tradeify is 10. $1,000 payout cap on the first time, Tradeify is 3. Capped payouts, 10,000, Tradeify is 15,000. It loses in every category, except for bigger drawdown. You can only have one account. Is that true? Can you have one account? That's it? Can you have more than one account? And the problem is it's not 15 days for payout cycle, it's 15 trading days. And they do their ATD thing as a 38% rule, right? And 62% rule. Like they have different, like essentially the bigger you make, the bigger your minimum day needs to be. So if you have a big blowout day, then you must trade big for it to even count as a day going forward. Limited to 100? Oh. That's not bad. But you can have 100 at one time? How many can you have at one time? Because multiple accounts allows you to DCA. That's the question. They only roll out 100 total? Oh, they're piloting the program. Oh, okay. I'm gonna write them a really long email explaining to them how this program, while it's good on the risk side for them, this program will never fly with traders. It's actually not. They just need to copy what Tradeify is doing. Brett nailed it. You really do. They really need to do that. Nobody's going to trade for 15 days for $1,000. Like, number one, first and foremost, nobody's going to pay $600 for an account so that maybe in 2 weeks you get $1,000 back. The return on your investment after taxes is 0. You make nothing because 60% of that gain is in your pocket. 40% goes Uncle Sam. You literally make nothing on your first payout. Even your first payout is a wash. You break even. See, with what Simba understood, he understood that, and he actually designed it in a way that on your first payout cycle, you make $3,000 after 10 days, which is a 5x return on investment. After taxes, your $3,000 loses, it nets you about $1,800. So after taxes, it's roughly 3x your investment. That's worth your 10 days of time. It's not worth your 10 days of time to trade for 15 days with an increasing minimum account trading to make for 15 days. You just break even. Nobody's gonna take that bet. It's a dumb bet. And I love ETF, but they've missed their opportunity with this one big time. This is a chance to revive, them and grow them very big. Direct to funded is huge. That program I can see in a minute sucks. It's not even bad. It sucks. I would never touch it with better options that are out there, and it's even more expensive than Tradeify on top of that. So, not trying to dog on him. I love the guys there, but I'm being honest with you guys. To more importantly, I'm on no one's payroll. I'm honest to y'all directly, and I can get 150K with Tradeify for $500. 150K for like 30% off of 700, so about $500. 440 when it goes to 35% off. So I even get cheaper and bigger and better for cheaper. Like, I'm partnering with ETF and a bunch of these other firms, but I have to be honest with you guys. You got to do the math. The $5,000 minimum buffer is good, you can get to your profit goal faster, which is kind of nice. That is the one plus side. Make 5,100 and lose 5,000. Tradeify is make 9,000 and lose 3,750. It's a tighter drawdown and a bigger gain. So Tradeify is slightly longer in the game and harder to play, but your return on a $3,000 minimum payment or maximum payment on 150K is good. Oh, wait, hold on. Wait, I spoke too soon. Hold on. Let me correct myself. This wasn't 150K. Let me start over. Let's compare apples to apples. So let me erase what I said. This is a 50K. Okay, so let me compare apples to apples. Okay, $1,000. Let me make sure Tradeify's 50K is different. All right. My bad on that ETF. Hold on. Let me be honest, because I was not comparing apples to apples. They're 50K straight to funded. Let me go to the payout rules at there. Let me see if their 50K is 1,000 or if it's 3. What is Matt's website? Here, let me give it to you real quick. It's in the description, but let me make sure I get everything right before I say anything. Payouts and withdrawals. Here we go. Let's compare apples to apples. So starting up, their 50K account is $629. Tradeify's 50K account is $500. It's cheaper with our code. It's much cheaper. So you get the 150K account for cheaper there. Now let's talk about the payout windows. Let me double check this. Yeah, so on their 50K accounts, you do get 3,000. Hold on, wait. No, I'm sorry. No, that's not the payout. It's 2,000. Okay. So Tradeify is 2,000, 2,000, 2,025. ETF is 1,000, 2,000, 3,000. So after 6 cycles of 45 days, it's 15 apiece. So 45 days, we're doing. Okay, let's put a little 30, 15, 30. Okay. So you get 1,000 with ETF, 2,000. We're comparing straight to funded accounts, by the way, if you guys are just tuning in. 3,000 total. And Tradeify is 2, 2, and 2, right? So you last for longer, it's the same. Tradeify is 2. Actually, no. It's 10 days. So it's 2, 2, oops, and 2. So after 30 days with Tradeify, you can get 6,000. Okay, I was right. 6K. And after 30 days with ETF, you only get 3K. So you get a quicker payout cycle and more money for less money on the account. They lose to Tradeify in every single category with the exception of their 50K is a max drawdown of 5 with a 5,000 profit target. Tradeify's is, I'm comparing direct to funded only. Hold up. Their 50K is straight to funded. Daily loss limit, trailing draw is a $2,000 drawdown. So they give you more drawdown, which is good. That's the benefit. That is the place they do win. So ETF gives you a bigger loss buffer. So Tradeify's their 50K account is a $2,000 drawdown and you're done. ETFs is 5. Apples for apples. That's massive. So ETF does give you, for the higher price, a massive buffer on the loss side. ETF is a monthly fee. It's not one time. Ooh, that's also different. It's also a different thing. So 5,000 is huge for the price to make 5,000 to 5,000. You're like in a 1-to-1 account. That's actually an interesting design. They give you it's pretty easy to get that profit target and you can take a lot of drawdown. That's actually pretty good. Now, can you only have one account max? Probably, right? My discount doesn't work with DTF with ETF. Well, no, my discount doesn't. I get their discount. So whatever their discount is, I get their discount. I don't get any special discount with those guys other than their advertised discount for the most part. Apex does not have direct to funded, so it doesn't compare. You can't compare the two. If you close a trade in under 10 seconds, you lose the whole account. Yeah, they have this rule against high frequency trading because there's a way that you can game the system. Like the paper trading feeds always mimic the real trading feeds, but they're delayed. You actually can high frequency trade by using arbitrage, using the real market data. Like if the real market jumps really quick, you can actually buy the fake data or the sim data quickly and scale quickly as it's tracking milliseconds behind the real data. So high frequency trading is an easy way to cheat the prop firm system, although they're all really good to catch you. So never do it. It's against the rules. But there are people that have been busted doing that. So getting in, getting out, getting in, getting out, trading like the micro imbalances between one data feed and the next is arbitrage. It's a very smart way to beat the system. However, they figured out how to combat that by telling you can't hold a trade for less than 10 seconds. Get in, get out, get in, get out. You're basically market making in a way. You already see the order flow in the real account, and then the algorithm that you have is, people just bought. Let me go ahead and, buy here, etc. It says invalid, so won't take it. Oh, really? Okay, thanks for letting me know. That's probably new. They probably haven't activated on the affiliate side yet, but now if they don't even have a code for me, then I ain't even gonna say anything at all about it. But all in all, there is no benefit to that program over Tradeify's direct to funded. There's really no reason to do it. You're gonna pay more for a bigger buffer, and that's basically it. Tradeify, you can lose 6,000 and you're out on the 150K account. On the 50K, it's only 2,000. But their 50K is significantly cheaper. So comparing apples for apples on the price you do pay with ETF. Forget the account size because that doesn't really mean anything. Let's talk about the drawdown because you're really just paying for drawdown. The ETF side of things, 5,000 drawdown will cost you $629. 5,000 drawdown will cost you roughly the same here. So that's the same price. ETF is not charging you. You're not getting bigger drawdown. I was mistaken. So yeah, ETF loses in every single category now. Because with Tradeify, quote unquote, it's about $500 for 6,000 drawdown. Here it is $629 for 5,000 drawdown. Yep, they lose in absolutely every category. There's zero reason to use this service. Zero. No offense, I love them. It's dead in the water. Tradeify is better and cheaper in every category now. That sucks. I had high hopes for their DTF program to at least provide some reason to use it. Unless I'm wrong. DTF means something different. Market movement here. I had really high hopes, man, that they were going to enter the scene strong with a competitive product. They entered the scene weak, and it looks bad. You're down, you're DTF, baby. I'm always down to DTF. Down to fly my profits to the moon. So what's interesting is that the 50K price of theirs is roughly equal to the... So you get, like I said, the only place they win is there's a quicker profit target. That's the one place they do win for that money. It's 5,100 instead of 9,000. That's the one thing that sets them apart. And that's not bad. That's actually gets you there twice as quick, but you still got to trade 15 days between payout cycles. Tradeify is 10. I don't care if it's a quicker path. You have to trade longer to get there. Trading longer is the reason traders fail. It's called time in market. So longer time in markets, it's a factor they use to scale the risk or to understand the risk in these prop firms. Time in market is a factor. The longer you're in the market, the higher the chance you are to fail. People don't understand that's one of the worst rules in because you don't understand the stats of the prop firm stuff. It's not the drawdown. It's not the price. It's not the reset fees. It's really, you have to compare how much drawdown you get for the money you pay and time in market. There's a big difference to your failure rate if you can get there in 10 days versus 12 days versus 15 days. It may not seem like a big deal. It's massive on the risk scale. If they make you trade one extra day, your probability goes way down that you're going to win and win the prize. If they make you trade 5 extra days, it's magnitudes greater, your chance of failure. Your chance of success is low. The trick is you want to get to your payout as fast as possible and take it. The 15 days thing for $600 for 5,000 drawdown, with payout caps on top of it, with a total cap of 10, where you break even after the first 15 days after taxes, you don't even get money. 0 people will use your service. If you guys are watching this, 0 people will use it. I'm not even advising people not to use it. The math doesn't check out. Maybe dumb people will use it who don't do the math, but smart traders that do the math will see that your competitors' products are better in every single category. Sucks. Kind of sucks. I was excited about it too. I'm always excited to see the new prop firm stuff, but then I look at them apples for apples to see where the value is. Literally 0. There's no reason, unless you just like them. And I love them. I don't hate these guys at all. They are very transparent. Lately, they've been very good. They've been good to us. They've been good to y'all. They help us on the stream, but their DTF program, and they're piloting it. Let's give them some credit. They're piloting it to figure it out. I'm going to send them a very long email and advise them if they listen to me or not. I don't know if they care. I'm going to advise them very, 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 very strongly on what I think they should do. And I'm going to tell them exactly my thoughts today. Hopefully they can say, yeah, we're just piloting it and figuring it out. We'll make changes. And maybe they'll make changes. They need to be very hyper competitive. The directive funded is a very much like new avenue. Anybody that hits directive funded is going to get my immediate attention. That's like the hot thing right now. Skip the eval stage. But you have to make it competitive because so far, Brett's got a monopoly on the directive funded. There's no... Tradeify is so golden, there's no reason not to use it for straight to funded. I mean, he's nailed every category. You can 5x your money after, or you can 3x your money after taxes in 10 days for $500. That's incredible. Literally, you $500, you get a $3,000 payout in 10 days after taxes. You make $1,800. So you've actually 3.6 extra money after taxes in 10 days. It's incredible. As a trader, that's where you need to find the value in a prop firm, is how much can I X my money over what period of time? And every day that you're in the market is kind of like your probability of success goes like this. It's like very bad. So time in market is one of the bigger ways to fail traders, as the prop firms always do. Your chance of success like literally deteriorates. The longer in the market you are, the higher the probability of something's going to fail. The failure rate, or the success rate, is 100% at 0 days, and it rapidly deteriorates the longer people are in market. Because there will be, if news kills half of your traders, and news comes every other day, then you're going to kill half, and then half, and then half, and then half, and you're left with a compounding. 100% people becomes 50, then 25, then 12.5, and rapidly after 4 or 5 news events, you've got very few people still standing. And so 5 extra days in the market is massive on the failure rate scale. It can turn an 80% pass rate into a 20% pass rate just because 2 or 3 news events can wipe out half of your traders every subsequent day. So time in market is one of the biggest failure points in prop firms, and you hope you guys understand that. They make you stay in 5 days longer versus 10 days longer. Don't overlook that as a massive part of the value. The idea that you can pay for something and be in the market quicker to get your payout, a 5-day payout window versus a 10-day payout window, is huge. I mean, it's a big deal. 5 days versus 7 days is huge. 2 extra days is massive. 5 days is massive. 15 against 10 is crazy massive. You don't even turn a profit until day 30. I don't think anyone would ever use that. I wouldn't ever use it. How to choose the best account type, more drawdown as a catch. No, you want to be in the market. You want to get your payout as quick as possible. That's the real value. And then you want to pay to get out of trailing drawdown, and you want to pay to get out of having to do the sim account step or the eval step if you can. Whose dashboard is good? I do like Tradeify's dashboard. It's actually really nice. TopSip is a really good dashboard. I haven't really traded too many prop accounts, to be honest, so I don't have comparison of using them. And every 30 days you have to pay 30. Oh, DeAndre telling me every 30 days you got to pay. So it's a monthly payment too. Oh God. Ooh, that's not good. Not good. I know one promotes Tick Trader. I don't know anything about them. So there's also a couple of futures firm or forex firms entering the space. Funded Now, I think, is what it's called, and then Funding Ticks or Funding Pips. I don't know. They all there's like, you know, huge forex prop firms that are now breaking into the future space now, looking for affiliates. Some of them reaching out to me and stuff. I don't know anything about them. I have to research pretty big in these. You don't. Who has independent news streaming updates for stock news? Use Financial Juice. They're as real time as you're going to get. The Juice's live audio is nice, yeah. Man, those guys over there, Amar and the gang, I love them, Final Juice. You know, I used to work very closely with them when they first launched out to help get their brand out, because they were looking for, you know, there wasn't a lot of streamers back in 2016. And when they launched, you know, there was, I mean, basically, if you were on YouTube, it was Matt, Pat, me, and Ross Cameron. That's it. YouTube didn't have a lot of people, you know, 8 years ago. It was like the four of us. And so, you know, we were like the bigger names in YouTube at the time. And they were like brand new. And so they reached out to all of us. And when they showed me their service, they actually came on our stream and did a demo with us. Oh, cool. Or a Zoom call. And did a demo. They were really nice about it. And their service was just great. Like, yeah, we have an algorithmic service that's going to read and parse all the news. You can basically... it's a news aggregator. You take all your different newses, you can tie in whichever ones you want and stream them all in one place. And then we're going to have an algorithm that reads through the news that comes in our feeds. It's going to print out the highlighted important news that you need to know based on, you know, our proprietary algorithmic scoring system, blah, blah, blah. And I was like, fucking great. How much is it? They're like, well, actually kind of free, you know, but we might have like a premium service one day. And they have, and I didn't even know, but I'm like, whatever service I'll buy the lifetime just to support. I was like, what a cool idea. I always like to support cool ideas. And I've been a fan ever since. I mean, they basically nailed it. They got really big, so I'm excited. When I first heard about it, I'm like, this is something that the industry needs, especially the retail side. A free news aggregator, it's great. You can pay. I think you get like something better if you pay. I don't even know. And I don't even know what the cost of it is now. But when I bought it, it was like $500. That's it. I don't see any trade act. The reason I'm not in a trade right now is because the market's not giving me anything good to trade off of. You guys are asking what I'm doing. I've already made my money today and chilling on this. But like $1,000, dude, worth every penny. When they offered lifetime the first time they did, they were offering it for like 50% off or whatever, like way back in the day. Way back in the day when they did it, and they were like 50% off. And I was like, everybody, and it was DTP before Rocket Scooter, but everybody, I was like, guys, this is a value. Go buy. And I think everybody in our group pretty much invested in it for $500, the lifetime membership. And I mean, it is fantastic. I mean, the stuff that even their own news aggregate or their own news feed inside the aggregate is worth every penny, you know? So yeah, they've certainly, create a very quality product. It's very affordable too. Like fuck paying like a Bloomberg news feed and stuff. You're gonna get the news like 2 seconds faster. The retail side, yeah, you can't beat such a cool product. Even if you don't even trade, it's headline news based on what's going on in the markets. You know, if you care about your 401k or what's going on in the tariff market, just go in there and read the red text. Like it's so neat just to kind of like, what's hot for the day. Well, here's the need to know. Every morning I read this. This is the news that happened overnight and over the weekend. And then they bundle up the most important things at the top. And then of course, random data. It's kind of neat. You can just read all this stuff. I always have it up. So every time I hear like the market's crazy, I go here. Now this is like usually a minute delayed because it's a retail news feed, but at least I knew when I saw the EU stuff, I'm kind of reacting pretty much quickly. You don't really miss much with it. How to choose the best account type? The more drawdown is the catch? No, so the best account type is, can you pay for perks that eliminate your failure chance? The longer you're in the market, the higher the probability is you're going to fail. So an eval stage, 10 days or something, and then you have like a 10-day payout stage or whatever. The eval is time and market. If you can pay to get out of the eval, pay more money to get out of the eval. I do it every time. I'll pay more money to get rid of the eval stage. So I go direct to fund it if I can. Trailing drawdown is absolutely toxic. Never trade with trailing drawdown if you can help it. Or at least make sure you have like take profit or whatever. Once you get past the buffer, trailing drawdown is gone. You need the option to remove trailing drawdown as quick as possible. That way, once you build your buffer, you're good. Apex, all these ones, they have buffers, right? And then after that, it's total time and market between and payout cap. So how long does it take to get a payout per dollar you spend? So if I spend $500 and it takes me 15 days, over here I spend $500 and it takes me 10 days. Well, clearly you want 10 days. Every day that you're in the market is a chance you lose the whole account. So for each dollar you spend, you want the quickest path to payout per dollar of payout. So what if somebody gives you $2,000 in 20 days versus $1,000 in 10 days? Well, they're both 2,000 every 20, but you want the one that's going to pay you out faster when all things are equal, because you don't want to have to spend more days in the market to get the bigger payout. So you have to kind of like weigh it out this way. What if something is 20 days for 3,000 and 10 days for 1,000? Ooh, 20 days for 3,000 sounds much better because the other one is only 2,000 in 20 days. But the other one pays out every 10 days versus every 15. Which one do you want? You want the one that pays out quicker, because the chances are you're going to fail all of your accounts, if not all of them, more than anything. You want your quickest path to payouts. It doesn't matter what the payout is. You want your payout to be anything as quick as possible. You guys got it? That's the rule. That's the trick to trader funding programs. That's my trick. You want the quickest path to payout for the dollar you spend. It doesn't matter if the payout's smaller than something that's longer for bigger. Take the smaller path, get to a payout first, and then return your money to that you start out break even as fast as possible. Because the failure rate is so high, it doesn't matter if you stay in. You can be like, well, if I stay in for longer, I can make more money. You're not going to last longer. Nobody will. The game is going to squeeze you out the longer you're in it. Statistically, the longer you're in it, you exponentially have a higher failure rate. So take quicker profits as fast as possible. Something gives you daily payouts. Something gives you a 5-day payout window versus a 10. These are this is the secret value of a prop firm. The quicker the payout. Doesn't matter if it's less. In terms of account size, on apples for apples, you want to compare how many dollars you spend for the drawdown that you get. Not the account. Account size doesn't mean anything. It's a drawdown. If one account is a $3,000 drawdown and one account's a $5,000 drawdown, then the $5,000 drawdown is a bigger account, quote unquote. If they say 50K account, 100K account, that's just marketing terms. That's not really the size of the account. The size of the account's the drawdown that you have. So Tradeify's $150,000 account with a $6,000 drawdown is a $6,000 account. And so you have to see it like that, because when you draw down to zero or negative 6,000 is your zero, you're out. So in reality, you're paying for the amount of drawdown with all the other things being equal. And that's where you have to kind of compare apples for apples. I would take a tighter drawdown for a shorter payout schedule any day. Your main decision-making factor is how quick you can get a payout. I would take a razor thin drawdown for a 1-day payout than I would take a fat drawdown for a 50-day payout. I want to get paid as quick as possible because the time in market is your biggest point of failure. The longer you're in this damn market, the more they make you trade, the higher the probability of your failure rate. So everything else is just tweaking rules to meet the risk model. Slightly bigger drawdown or slightly more expensive, extra this, reset fees. In reality, you kind of want to see per dollar spent how quick you can get a return. That's it. And for whatever it's worth, I know we hate the payout cap on Tradeify, the $3,000 payout cap, but it's golden because it's quick in 10 days. Every 10 days I make money with these guys. It's just a paycheck every 10 days. I'm still in my accounts. I'm still pushing it. NVIDIA's ripping. All right, guys. Good job on the contest today. I've got no actionable entries since my first trade out the door. I love seeing NVIDIA move. It makes me happy. I am kind of worried about the way this market's panning out, though. We got expiration on Thursday. Hopefully we get some movement off of this. I don't know if this is going to create a squeeze in expiration or not. But this market is having a hard time picking up momentum without any good news to go with it. The DD ratio is back down to being like let's see where QQQ is at right now. Is it 15? Yep, we have expiration on Thursday, the 17th. I'm just looking at the option schedules here. Dude, the IV on the put side is like 40% on these near-term options. It's insane. This like options are premium so high. 40% near the money, 36% near the money on Friday's expiration, Thursday's expiration. This market's still looking good. The DD ratio is less than half though. I don't like seeing that. So right now, I just got into a put trade to hedge my long-term swing trade on the call side. The DD ratio less than half. So again, this is just hedging just in case you have another leg down. DD ratio less than half and opening below MHP. I opened some short-term puts that expire this week. To hedge against the idea that the market pulls back this way. I just put 3,000 into near-term expiring puts. Just to hedge through expiration. Like I said, I'm going to put a couple hundred G's into this trade on the long side if I can catch a bottom. But we'll see. I have QQQ 457 expiring puts near the money. I bought them expensive, but the ratio jumping back below half, I just need to make sure that in case the market takes a complete nosedive this week into expiration, I've got some hedging. And I'm near the money hedging, so I got some pretty let's see what I was just doing some math really quick. 25 delta, which isn't bad at all. Yep, and Netflix earnings and other things this week could also drop the market substantially. If the market rallies and I lose my $3,000 hedge, I'll offset it with my call gain, etc. I didn't want to do like a put spread or a call spread. I mean, put spread. I didn't want to do a put spread. I just bought naked puts. Sorry. Netflix earnings is a huge variable. I don't like seeing the DD ratio not go above 50 though. So I'm going to protect the exposure I have right now, which the only exposure I have currently in the market is 35K worth of calls. And every 3% the market drops, I'm going to buy another 20K worth of calls. So I'm just protecting like my 35K with some $3,000 short-term puts just in case the market falls off of DD less than half. So DD less than half is short pressure off of here. It's just a hedge if the market decides to nosedive into expiration. And we'll see. We'll see what happens. I'm still very bullish this market, but we are losing the ratio, which I don't like to see. All right, you cool cats. I'm out of here. Nope, not yet. 30 minutes, 30 minutes. We'll hang. I don't feel the market's rallying today. I don't feel it anymore. I don't feel it in my bones. Good news can come and change everything, though. We'll see. We'll see. Above MHP is good. Good for bigger runs up. My overall bias is still bullish. I'm not bearish, but will take a bear hedge every single time I lose some confidence here. I need to make sure I'm protected. And the idea that QQQ opened above MHP, but SPY didn't, could also bring the SPY back down below monthly hedge pressure. So you be very careful of this. Like that we can't hit the lower band today or something. This is like another overreaction. But I wonder which stocks are losing both sides today. Unless it's an IP. Let's look at the IP on the scanner and make sure it's not IPs. Nope, it's not IPs. It's genuine bear setups. Who is it? Let's see. Who's in a bear market today? Tesla? Who's bear today? Tesla's in an IP though. Or it's above an IP, yeah. Apple, same thing. So I'm going to add a DD band. To my hedge. That'll be doing a buyback on the bonds that are selling. That does make sense. So there for a minute, but he asked in chat, what's the difference between the 20 days trial and the boot camp? Oh no, the boot camp is 20 days. The trial comes with the software for a month. So the actual trial is a 1 month trial that uses the software and comes with the boot camp. So it's like the boot camp plus the software or the boot camp by itself. They're two different. I still feel the market has some good up potential here. Not really selling off yet, but we'll see. I'd love to see this market rally. When's bootcamp start again? In about a week and a half. So right at the beginning of May. We'll be starting up all over again. So typically what we're going to do is we're going to start at the beginning of every month. I kind of figured out like the schedule. While the schedule is cool and helpful, like to just jump in and keep going, I think it'd be better to do it at the start of every month because it is 20 days. And then the start of every month, do it. Kind of like on a schedule. So somewhere around the start of May. On your end, the platform is not printing candles or lagging behind by 10 minutes. You have to have, yeah, it's not printing candles because it's just a reference data set for your equities. We don't trade equities here. Your futures data will print all your candles. In equities, we just have a reference data set that shows like about where the price is. So it makes your subscription significantly cheaper than having to buy professional data feeds for y'all. So on the equity side, we don't use candle data for anything other than just reference. We really, you know, all my pivots are, you know, I'm trading futures, right? So if you're talking about like, well, on QQQ, it's not printing all the candle data. It's just because we don't need it for anything. If that's what you're talking about. Your display data. Need it for better entries? No, you're not trading with equities data. Futures are the pivots if you're trading futures. If we get it, you're going to have to pay a lot of money for it. So we had a vote in the community. They didn't want it. All your subscriptions would have to go up to cover the cost of it. You wouldn't be able to get a very affordable $159 a month rocket scooter. It'd be closer to $200 to $250 if you guys wanted that. How to get futures data? Did you guys, okay, have you guys gotten, anybody that's signed up recently, have you gotten a welcome email from us? I'll answer any further questions if somebody answers me if you gotten a welcome email from us or no. You got the email? Okay. I'm just curious if it did or didn't send. We just started doing it recently. Like in the last couple weeks. The raffle's still rigged, yeah. Okay, so how do you get futures data? The welcome email will tell you how to do it. It gives you specific instructions on how to do it, but you're going to connect your brokerage account to here, whatever you use that's using CQG. So Edge, Clear, AMP, whoever you got, you need to get your CQG credentials from your broker, and then they connect to here. Anything that's outside of the Ninja Trader, Tradeovate family should work here with CQG. You got a new email, but not a new subscriber? Yeah, I know. I know, that's a thing. It's sending it to everybody once a month. The old website still tries to charge. You need to cancel your old subscription. If you still have a legacy subscription on the old site, we have to cancel you. So you have to reach out to cancel you if you move to the new site and you didn't cancel before you moved. Because the old site redirects to your new site for the login. So just send me a message in Discord. Market is sideways, yeah. How's Apex different? Apex is more like cheaper accounts, trailing drawdown, which basically means your drawdown follows your P&L as you go up, meaning that you can still be green in the account and lose the account. And so the drawdown problem in Apex is why a lot of people don't use them. But if you use Apex, Take Profit is the better alternative to Apex. Similar but better. Take Profit Trader. Apex, you go through a sim account stage, you pass the evaluation, then you move to a funded, you call it performance account stage, and then from there you just have pretty much similar roles. But Take Profit is kind of like the better Apex now. That's why everybody's using them. Can I get you a financial juice discount for the monthly or lifetime? I don't know if I can. I don't know if they have an affiliate program. I can reach out and see. The difference with Apex is you may or may not get paid. Yeah, that's kind of the thing now, right? Apex is getting a lot of heat from that. Straight up MHP, MRES is negative. If it does hit MHP, yeah, it could fall pretty hard. That's why right now I'm starting to build a hedge on my longer term call play, because if the market does resist with DD ratio less than half and us challenging hedge pressure again, monthly hedge pressure, it could fall pretty bad. If we test these levels. It's rare to break through hedge pressure, keep going, especially with negative DD. There is resistance pressure from here today. I'm not shorting from here. The market could very well rally on good news or hit this and pop and drop. But I want to make sure I'm at least covered on the event that the market does sell off in the next week or two. See you later, Julian. See you tomorrow, man. But yeah, so if you guys like Yoda, if you need the real-time candle data, it's just very expensive. So we had a vote early on. We had it for a while with Rocket Scooter, and then I had to raise prices. And God, when I raised prices from $0 to $3 to charge for data. Like, people cried in Discord. Everyone's a bunch of fucking babies about it. I love my customers. But Jesus Christ, like, I have to pay $3 for data. Now it's $10, by the way, but I had to pay $3. It was a huge debate, and it was like weeks of just discussion with the community, so nobody wanted to pay $3 fucking. So we're like, all right, well, if you guys want the full-time candles, it's gonna be very expensive. And it's just like, as much as I'd love to just get it for free, the exchange is charging me tens of thousands of dollars a month to give it to y'all. We gotta pay for it somehow. People were crying, dude. Not everybody, just a handful of people. Everyone was pretty cool with it. But it was a debate, and there were people, I'm a lifetime member, and I've been here for years, and I don't think it's fair that we have. I'm like, I don't have to provide you anything new. That wasn't a promise of lifetime, that I have to keep enriching you with free stuff. Like, I don't have to go out and buy the new data feed. It comes out of my pocket if we can't recoup the cost. And then there was like 90%, 95% of the people were very much like, yeah, we'll pay for it and we'll use it if we want it. But it was a huge debate. And then we basically had to run together, and someone was like, I don't want to stay in this membership anymore because I don't want to pay extra for data and yada. I'm just like, good Lord. So I'm fearful of saying, by the way, we're gonna have to charge, 20 extra bucks a month for, more candle data. You're gonna freak out. Yeah, liquidity maps are for referencing your levels so that you can translate them to futures. It does, like, all I do is look at this is how the way I look at it. I look at this and I go, we're at 460.5, and 457.5 is where my MHP is. That's roughly 3 points in NASDAQ. That's 100 points in 120 points in QQQ, or 30 points in the S&P, right? So then I just do the math very quick. And so I just use this as reference, and we teach you guys how to do it. You really care about your futures pivot, which is real-time data. And this is real-time data. We just don't buy all the exchanges so we can make your subscription cheap. To get a trading platform with algorithmic capabilities like ours at 150 bucks is an absolute steal. I should be charging about $500 a month for it, so you can get all the bells and whistles. But we try to make it accessible for the average trader. So, what's up, KKS? All right, so an example like 460.55 to 57.55 is 3 points QQQ, 120 points NASDAQ. From here, that takes me down to 940. Okay. So my brain says, aha, about 940 is about where MHP is. And now I know about 940. And as we approach, I just kind of eyeball it. That's pretty much how I do it. Those people were still on dial-up. Yeah. People are, I don't know. Used to, we didn't even have a platform. We just had an app that gave you the levels, and you had to go draw them on your own trading view. So the idea, we can come around and vote again. If I get X number of signatures and I'll make you guys sign up for a year worth of data up front, I'll go buy bigger data for y'all. We need to recover about $10,000 a month worth of cost additional. So if we can pull $120,000 a year commitment from the community, I'll go get it and everyone can benefit from it. Am I showing my live entries? Yeah, on the screen. They're in front of your face. Lower right side of the screen are all my trades. Top right of the screen is profit I made today. Haven't made any more trades since that first trade in the morning. Flat market, nothing to touch. 18,848 is the overnight dynamic hedge pressure. So this is monthly hedge pressure for NASDAQ on future side. How many people here would be interested in, let's see, if I had 1,000, let's say about 1,000 people that paid 10 bucks extra a month. $500 people would be 20. 250 people would be 40. Garrett says don't need it. Yeah, and when Garrett remembers, we kind of had the conversation before with all the members. People were like, we don't need it. And I'm telling you, you don't need it. That's what I'm saying. I'm trying to save you money. I can make it a wash and just charge everybody for it, but you don't need it. As helpful as it would be, it's better for you to pay less money to not have it. I'm telling you, to go out and buy 100% of the market volume from NYSE, so we have fuller, more developed candles on the equity side. We just buy reference data. So we buy a couple of exchanges just so we can have about where the price kind of was. So your real-time data is in futures, where the meat and potatoes of the platform is in futures. This just referencing your liquidity maps to kind of calculate what your liquidity map would cost. We need to raise like 10,000 a month so we can get the full breadth of the SIP data feeds. And we did it for a while with you guys, and then we realized the expense wasn't worth it because it wasn't something that we used, and we learned to live without it before we had it, and then nobody wanted to pay the extended price for it. So, and it also was destabilizing our system because we had to redesign the system to be able to house it and all that stuff, and it was just like better to get rid of it. Well, futures conversions ever plot automatically in the future? You shouldn't convert automated like that because the numbers will move. When you convert equities to futures, the ratio is never exactly the same. So any level that you convert over is going to like move around on the chart every time the prices update, because S&P and SPY like move like this. They don't necessarily like move in a straight line because they dance around each other. Your converted levels will dance. So we tell you to watch one and trade the other, basically. So when you're looking at equities and futures levels, you should never convert them, because when you get to them, they won't be the same. So an example is right now I'm saying about from here, monthly hedge pressure is likely about 920, but I don't know exactly what it'll be. Just I know kind of what it'll be when we get there. Hopefully that makes sense. So when I get there, it might actually be 940 or 930 or, you know, a little bit off. Where's my MHPQQ? So it's my estimate, right? Let's like actually just say estimate here. Conversion estimate. Does that make sense, Chris? Hopefully that makes sense. You don't need more distractions, not needed. Maybe it's better to use a line there instead of candles. I mean, it doesn't matter what you do. What a lot of people here do is they just use like a 5-minute chart or something. You shouldn't be using your equities for pivots. Like, it's not what equities are designed to do. Equities is just a reference for you to see about where you are relative to your liquidity map. In reality, I'm always looking at my futures chart. I just kind of glance over here and go like, oh, well, we are below hedge pressure. Okay, so that's good to know. You cool, Chris? Okay, cool. Yeah, the dancing effect is... So I came up with the solution to that, which I thought sounded pretty cool, is the idea that the conversion only updates when you're near it. So as an example, I'm going to draw a little bit of a graph and turn your head on your side, but the graph is going to look like this. Pretend this is the pivot, and the graph will look like something like that, okay? And what that means is, on this axis, is how frequent it updates. When you're really far away, let's say that it updates every 10 minutes, okay? And then if price was closer to your pivot, it'll update every 5 minutes. And then when it's right here, it'll update every 1 minute. And then when it's right here, it'll update every second. So the way to get rid of dancing is just to make it dance less or update it more often. So I don't care if this is dancing around in real time. I'm not near it, so I don't care. I don't want to stare at a bunch of moving levels. It's going to make me dizzy. So maybe like right here, this will update every 5 minutes, then it will move. Okay, so like say 5 minutes later, it'll go blip. Then 5 minutes later, it'll go blip. And then as we prices down here, then every minute it's going to update. Like landing a plane. And as soon as you're right near the runway, it's updating every second. So you can see exactly where it is. That was my solution, which I think is probably the best solution for the problem, is to just change the frequency at which it updates. And that's still something on the table that we might actually do for the conversion portion. Does that make sense, I guess? Hopefully that makes sense, Chris. So to have it update more frequently when you're near the pivot. So it's only dancing when you're about to touch it. And so it's not like you're not watching your DD bands over here dancing. You're not watching your hedge pressure over here dancing. You stopped using Heiken Ashi. I guess it's good for trending markets. It's good for trending markets, I would say, with momentum, but other than that, Yeah. You know the answer to this, but you have CQG data with your Rain account, can execute trades on Rocket Scooter Palm. You should be able to, but contact your FCM and make sure that they're compatible with the Rocket Scooter CQG white label. And if not, your FCM just needs to tell CQG to be compatible with them one time. So like there's a million brokers. The way it works with CQG is CQG only opens the door if we tell them to. They don't give you access to all the brokers. It's weird. I don't even know why they do it. Like they allow you to gatekeep who or can't come into your white label. I was like, can you just turn them all on? They're like, we don't necessarily work like that. And I was like, I gave them a list of ones I wanted to turn on. Then I said, give me your full list of brokers. And I said, turn all of these on. But some of them might not work, but it's as very simple as the broker just has to go into the CAS system and allow their brokerage service or allow their brokerage service to be compatible with Rocket at one time, and then it works for everybody. Give them a holler and tell me what they say. It should, hopefully it should work, but if not, we can get to work quick. Updating more frequently near the pivot would be cool. I think that's a cool solution to that problem, yeah. But honestly, guys, if I could recoup the cost of the... Oh, man, it is so chilling in here. Whatever they did works. I'm freezing my balls off. You have TradingView futures data that doesn't work. Unfortunately, data doesn't transfer outside of certain platforms. TradingView's data is TradingView's data, just like our data is our data. CQG is the only, and Rhythmic are like the only kind of like multi-platform compatible data feeds that you get from your brokers and stuff. A CQG data feed from your broker can go to different platforms. I can tie my CQG. I can tie my AMP account in the TradingView. I can tie my AMP account in the Rocket Scooter. I can tie my AMP account into 1,000 different platforms. But if I buy data from TradingView, it's locked into TradingView. That's by design of each platform provider. As the data, as the vendor of record, you're paying them for your data. They're adding a surcharge to recoup the cost. They're not going to let your data work anywhere else because there's all these entitlement rules about data access. They can't, even if they wanted to. They're selling you data for profit at TradingView. So they're taking the big bulk data feed they have and then reselling it to you at a markup to make money off of selling you data. So ES could have a liquidity map based on SPY. Well, that's the ultimate goal, yeah, is to have it converted over. Where your levels will move around the closer you get to them, yeah. Boring trading day. I'm not making any more futures trades today. I'm just kind of watching my bigger market moves here. This flat market's chilling. DD ratio less than half, which tells me, today there's very big potential for this to try to press to this again and ultimately field its way back down to this level. I don't want it to be here. This is what my fear is right here. But I still feel the market is going up. I'm not betting that the market's coming down. We just have resistance to movement. But we'll see. Data burn date, yeah. Burn out them options, man. No actionable pivots today except for upper DD band is a possible short. Lower monthly hedge pressure is a possible long. We are literally trading between these two pivots all day today, and I've been waiting all day for something to happen. All day. There's resistance from there, there's support from there, and then we just wait.
Nothing good is happening today.
Market internals, explain. What do you mean by internals? Dude, it was freezing cold in here. Let me go change the AC. Man, whatever they did worked. It's at 67 degrees up here, and it's freezing cold. Hopefully it's not freezing downstairs. They fixed the damper. The downstairs damper wasn't closing. It was wide open. So basically what was happening was for me to cool off this like heated production studio that I'm in with all the computers I got going on. It was cooling off the rest of the house like crazy. All this cold air coming in here was just dropping the bottom floor. And IDOC's walking around with the freaking parka on. With icicles hanging off her eyebrows. What My Funded Futures discount is currently available. We get 5% off if there's no deal, or we get their best deal. So whatever their deal is, we get it. I'm in Texas, man. Internals like tick and add and things like that. Trend. She may be frozen on her chair. Nah. I have to pretend I'm mad at her because she's cheating on me with the invisible biker ghost who left his Harley keys here. She's been busted. I'm not gonna let her get away with it. I'm gonna hire some guy to come up to us at dinner and be like, "You said you loved me. I left my keys over at your house." And I just want to completely troll her for it. It'd be so much fun. 1 month trial. There's no 1 month trial, not here. That's free. That is the trial. The trial's paid. It's half price for a month. If you bought it, that's the trial. Futures are a derivative of the regular spot market. So anyone using SP internals convergence at key levels. I know, but what are you talking about by SP internals? What do you mean? Now that word, we understand futures, but I mean, what do you mean by S&P internals convergence at key levels? Those words don't make sense to me. So you have to explain what you're specifically talking about. TOS Tech Guy made your platform worse. The real talk. The TOS Tech Guy is God, they haven't had like the API at Thinkorswim that used to be available. Right? I guess it's still available if you're grandfathered in, because we are. But the Thinkorswim API for like years, it was a place you can go as a developer and develop apps that traded directly in Thinkorswim. It was great. And then after like years went by, I think it was just abandoned completely. The forums were dead. You send an email to their department, and then like 6 months later, they get back with you with an answer. Kind of like it was just like every 6 months, they sent an intern to go check the 5 emails they'd get. So tech support has just been also kind of to that degree, because it's a 20-year-old platform. Nobody knows anything about it. The original creators are far gone from the platform itself, and it's just like in a weird state of nobody knows how this dinosaur works. It's an old aging platform that sucks. Thanks for having soothing music instead of something annoying. Well, thank you. I wrote it myself, kind of. An AI bot, in a way. So, whoever is asking about market internals, you mind expanding? If you're talking about tick and trend and all that stuff. Everyone in technical analysis world uses completely different explanations for things. Just like, are you talking about indicators? Are you talking about the company's internal health, financials, microeconomic? What's your definition of what you consider being S&P internal? Where are my thoughts on where QQQ will end up by today or by Thursday? It's hard to say. Oh, so 80 SPD, like the advanced and client stuff. Yeah. No, I don't use any of that. Although they are decent for looking at different parts of the market, like advance and decline. For instance, if there's declining volume, it's advancing price and things like that. But I found them to be more like noise than anything when it comes to understanding the market. What we use here is arbitrage indicators. So these indicators right here are how much the index, ETF, or derivatives are lagging behind the sum of the stocks inside of them. An example on this particular setup. So we have better types of indicators for that type of analysis. As an example, this white line right here is telling me if this white line is below 0, that the S&P and QQQ are overpriced. They have gapped up when the stocks haven't. The stocks are actually resting comfortably in the bottom half of the redistribution zone, the space between the gap. And so the ETF is priced higher than the sum of the stocks, which is why it's going to have a hard time moving from that. The stocks don't catch up. The ETF is more comfortable being trading down there. Hopefully that makes sense. So we use arbitrage indications to let us know. Today, DD ratio is the percent of market cap that are of the stocks of the S&P that are in a what we call a bull zone or hedge positive long hedging. People accumulating shares to hedge like sold calls, right? So if this ratio is less than half, the majority of the stocks are actually trading in bear zones. So the QQQ is going to be unlikely to push into a bull zone and rally. And that's kind of like our internals, is we're looking at the underlying futures and ETFs compared to what the sum of the stocks are doing. Okay. And because of that, 10 minutes or 30 minutes ago, I started buying puts to hedge against Friday on a potential sell-off as we're losing momentum. If you see that, we're losing momentum in the bull side. My hedge is starting to take off pretty good. My hedge is already at 50%. Holy shit. That's a good play. That's good. That'll keep me going through Friday. Oops. My hedge is up 80%. Holy shit. There we go. That's nice. My hedge is up 80%. That's crazy. That's good. That's good to know. Well, that answers your questions, hopefully. A QQQ resilience indicator, so usually NASDAQ. We do have one right here. We have a Russell one as well. So we have all the QQQs right here. S&P's right there. That was fun. Hedge is up 80% now. I had 457 puts. No, I'm long the market. I'm absolutely long the market. I've got $35,000 buying calls. Every time the market dips, I'm putting another 20K in. About every 3% the market dips, I'm putting 20K in. So when I get negative kind of data points, like here, negative, or bearish data points, I'm hedging against my longer calls in this market. Why not sell puts instead of buying calls? That's a more expensive way to long the market. My hedge is up 110%. That's cool. That was nice, trues. 110%. I turned my little $3,000 hedge into $6,000. Options are fun, but I'm not a big day trader of options. Question is, should I buy MHP? I'm gonna avoid it this time. So as you see, guys, look earlier. Remember I guessed that QQQ was gonna be about 920, and right when we get there, it's actually a little bit higher. It's about actually 940. Conversion estimate there. Question is, should I long some futures off of that dip? Grab the dip on QQQ and monthly hedge. SPY's back below MHP though. That is the problem. Resiliences are now negative. That's also the problem. Oh, this is tough because everything does look down. At least the data today looks down. I grabbed the long in one account. Probably not the best move, but let me move it over here. Give you guys the one I grabbed the long on. One account, one contract, nothing crazy. Right at hedge. Every single time. Might as well. Monthly rest is less than 0, so the probability of it holding is not the best. And S&P is already open below MHP, came right back below MHP. Let's see if I can get anything off of it though. Trade would be from hedge to hedge, so 2.5 to 1 setup. And I'm down $600 or so if I'm wrong on this. Wait, hold on. Then I'm sorry, 2 to 1. So 2.5 is 100 points. 2.5, and I'm not very confident about this trade at all. But I statistically take it every time. I might get lucky. So I'm only touching it with one account. I'm going to stop before 56.50. Stop there. S&P has no pivots to hold off of. That's kind of the bad part. And Nasdaq is pretty much here. Okay. Double check there's not any bad news or anything that's kind of getting in the way of this. Nothing today. Do you have any Fed speakers talking today? I thought we had somebody talking. Barkin speaking. That was this morning though. I know J-Pal speaks this week too. When is J-Pal speaking? A bunch of Fed members are talking. When's Papa Bear talking? On Wednesday at noon. Come on, give us a teeny tiny little bounce. Give me something here. Run me something good. My hedge is up 100%. So I had puts that are up 100% now. I'm just grabbing the dip in futures. I'm definitely buying the dip. I'm long. I'm so bullish this market. It's not even crazy. I'm taking the gamble that we work out the tariff problems. I'm on the fence that we work it out. I don't know about you guys. Do we work it out? I'll take it with the free monthly hedge to hedge. Every single time I got to take it. Despite everything looking not so great, I have to take it. Statistically, it's a good trade. Although we opened above MHP on NASDAQ, so 90% days to close above it. We should be good. Get my 80 points here. Let's go. Keep running. Keep on running. Ooh, I haven't had a losing day since like the first day of March. Or first day of April. Insane. No, I lied. I had one losing day. I did. Two losing days, I think. They were small. These long tails are positive sign to go long. I feel it. That's just me, though. Should I close my hedge and then invest the gains from the hedge into the long side again? That I should do. Might as well. Something about this market just feels iffy. I don't like that the data is looking as weird as it is. Okay. Oh. I retrace half that distance here. Let's go ahead and take that profit. I can go the whole way up. One more candle. Come on, 800. Let's hit it. Let's take it. All right, I'm going to call it a day. Great trades again. Winning day again. All my accounts green again. Let's go, let's go, let's go. I only did 2 accounts. Just close them both. That's it for the day. Not a bad day. 44.54. 62, 72, 7,500 bucks. Plus 3,000 in my hedge. Double my hedge money. That's like $10,000 a day across the board. Once we hit a hedge pressure though, I closed out my hedge and took the $3,000 gain and bought $3,000 more worth of calls. That's cool. Let me just take my put gains and just keep adding to the market. I'm not really hedging my position. I'm doubling down on it with the free money it just gave myself. Now I got more money to keep hedging my original position. All right, I'm out. I love you guys. Peace. Pop a 10G profit today. Crushing it like I've been doing. Thanks for tuning in, guys. I love y'all to death. Thank you for supporting the Rocket Seer stream and all things we're doing here. Y'all are my favorite people in this world. I love y'all to death. Don't forget to use code RocketScared for all your prop firm needs today. We get the best deals out there. Rocket Scooter at TPT, Tradeify, ETF, MyFund and Futures, you name it, Apex, we got it all.
Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads no fear. No more guesswork, no more loss. Seeing paths the others cross.